I like to simplify things as much as possible. The more you can keep simple, the better off you're going to be. So I try to keep it very simple, and then I add complexities, which I call layers of probability. So my entire strategy, it could kind of be defined with like 6-ish broad categories. It's a top-down charting approach, meaning, you know, the weekly is most important, weekly or monthly, then down to the daily, and then down to the 30-minute. And my edge is manipulating small time frames like intraday charts to find quote-unquote perfect entries on weekly technical trades. So I'm talking about perfect entries only. So I know 88's my out. What I'm looking for is 88 gonna hold up. That's what I'm looking for. When this thing is diving, I'm saying, let me see buyers show up at 88, 89, 90 bucks. So, you know, these are 15-minute candles here. I start buying 90 and then I add 91 and then this is like the technical intraday entry through these highs to me.
Right.
And I buy all that against 88. Here early in the day, I'm selling up here in 53, 54, whatever. And then it kind of breaks this area down. This is where I'm completely out of the trade. So these trades specifically, I'm going to be much more willing to take profit into strength more quickly because I understand
they're very fast. Yeah,
they're very fast, and they're as fast as they go up, they can come back, as this one did. The entry's sick. The entry's always going to be sick. It's the exit that's garbage. This is why I'm telling you, your emotions in the moment lie to you. This is the stuff I like to track on my journal that I feel is your emotions in real time are not usually a good thing. They're usually working against you because they're kind of reducing to your normal, basic human monolith kind of instincts, right? It's like, I just want to protect myself and survive. I buy, what's this close at? It closes 63.50. So I buy around there. My stop is these lows, 61.39. So I buy, what I buy? Close 63.50, 61.39. So $1.80 in risk. I gotta make $9, right? 50. I got at 72.50 is where I'm looking to take profit. So I buy this one, and now what I want you to focus on with me is the entries, is because like that's an edge. This is real edge we're talking here. So now it becomes the hottest trade on Twitter. Everyone over the weekend. The big idea of the Friday swings is you see traders going nuts over the same charts on Twitter every weekend. If I can already be in this move, it's so hard to trade technical triggers to me. They make the action so difficult, so choppy. They want to wear out retail traders. They want them to take a loss there so they can rip it and have retail traders chase and create momentum so they can make more money. You know, whoever the hell they is. This is the most A++ setup. So we got the theme on our hands, AI healthcare. The fundamentals are looking good. It's in an IPO base. This is my favorite setup. It's in this tight consolidation.
Hey everyone, welcome back to another episode. As always, we bring top traders, US investing champions, and market wizards here onto the show to share their journeys, their strategies, the mistakes they made throughout their careers, and key learnings that they want to pass on to you guys to save you time, save you money, and improve your performance. We've been lucky enough to hear back from many viewers over the past few years about how much of a positive impact this podcast has had on their trading journeys, and we're incredibly grateful for all the support. If you're looking for a free, quick, and easy way to give back to us and show us some goodwill, please double check that you're subscribed down below. And if you aren't, go ahead and click that button. This helps us out in two ways. First, it lets YouTube know that this is a valuable resource and it'll push it to a wider audience of traders. And two, it allows us to reach out to bigger and better guests in the future. So thank you so much for your support in advance. Also, go ahead and click the like button if you haven't already. And if you have any suggestions for traders you'd like us to bring on the show, also let us know down below in the comment section. And with that said, thanks again for your support, and sit back, relax, and enjoy. All right, welcome everybody back to the TraderLion podcast. I'm your host, Richard Moglen. Joining us today is Matthew Sheikh Pryzby. He finished second in the 2024 U.S. Investing Championship, $1 million division, enhanced growth division. That's a mouthful to say, but basically he's a fantastic trader, and I'm really excited today to dive into his process, his backstory. We're going to cover a lot of his trades from the past year in detail, showing the good, the bad, and the ugly. Dive deep into all the secrets that he's got to share with us. So Sheikh, thank you so much for being here, and yeah, it's great to have you.
Man, it's great to be here, Richard, and thank you so much for having me on. Big full circle moment for me here. You know, I've been on you all year about this interview, and I'll kind of tell my story about how it all came to fruition and stuff real quick. I'm not a social media guy. I'm not a Twitter guy. I came on at the onset of 2025 this year because I had a huge plan, and I achieved profitability in like 2015. I started trading in 2013, and as soon as I did, the huge goal for me was to start my own fund, and everything I've done in life up until has been driving towards that goal. So December 2023, I'm kind of sitting there. I'm like, I had a great year, but I'm kind of searching for that new realm, you know, and I feel stagnant in life. I'm doing very well trading. It's nothing like that, but I don't feel growth. And I'm a guy who I'm obsessed with growth. If I have no growth, I'm going nuts. So I kind of concoct this plan, and I started looking on the internet of like how I can start a fund but also get recognition, get my name out there. So I kind of reverse engineer the process. I start looking online, and I see the TraderLion is the premier. Like, thank you so much for having me on. I can't believe I'm getting interviewed by a guy who interviews Stan Weinstein. Like, he's such a big part of my process. So it's a little mind-boggling for me in that.
Well, it's great to have you, man.
What?
Yeah, it's great to have you, man.
Oh, man, you are telling me, my friend. So I reverse engineer this kind of equation where I'm like, okay, I need to get a TraderLion interview. How can I get a TraderLion interview? Okay, it seems like they interview everyone from who wins the U.S. Investing Championship. So then I kind of concoct a plan. It's like, all right, 2024, I'm going to enter the U.S. Investing Championship. I'm going to win. I'll come on Twitter at the start of 25. I'll start to get some love, and I'll start my fund 2026. So being here on this day is like, delayed gratification is the sweetest thing on earth. It's like 13 years of like blood, sweat, and tears to get to this moment. So proud of myself for being here. Honestly, I can't wait to get into this stuff.
Yeah, well, let's dive in, and you shared a little bit of your story just there, but I'd love to hear about, what first got you interested in trading in the first place. What was your route to get here? And I understand that you're an athlete, so I'd be interested to hear like kind of how those skills and experiences translated over to the competitive field of the markets. That'd be awesome.
Absolutely. So I was a QB in high school. I was a QB and basketball player. Shouts out to Bobby Campos, who helped me get this interview. He's been on your ass all year, just like I have. For me, that's my guy. He was my left guard in high school. But I was a QB in high school, and I only cared about sports. I wasn't super interested in my future, jobs, market, anything like that. I just wanted to play sports. I was a good football player in college, and I consulted my dad, and he's simply like, go somewhere you can play football that'll get you a good finance education, because then you'll be able to at least figure out how to make some money. So I end up at Bentley University, big economics and finance school, and my friends are getting all these investment banking and analyst jobs and stuff coming out of college, and it just seems like death to me. Like I'll never be able to do that. So I wanted to get investing because it seemed like, honestly, an opportunity to compete every day. So I'm trying to find my entry into investing. So my first job I took out of college was with ING Financial. They're an asset management fund, and I thought they're going to teach you how to, manage assets and trade and all this stuff. And that was kind of my opportunity to get involved. So I take the job. I get my Series 7. I study all summer. I'm so excited. And then as the teachings are, as you're getting into more of the role of the job, I could clearly see they just want you to kind of go through your network, find some rich relatives, invest their money, right? Yeah. Invest their money into automated models, and just kind of use your network and beg them for money. And that's not me. Like I just want to make something out of myself. The last thing I want to do in the world is ask for help. So I know that this job isn't for me, but if I get my Series 7, I'm much more of an attractive of a hire. So I get the Series 7. Boss calls me up to congratulate. He's he's so excited, and I just quit right on the job. I'm like, sorry, man, like I can't do this. And he just starts cursing me out like crazy, like super, super funny in hindsight. So now I still got to find a job. And now I'm just going, I'm reaching out to kind of prop trading firms and things like that. And that's when I find myself on the floor of T3 trading looking for a job. And I'm there for 7 minutes, literally. And I just see traders talking. I feel the energy of a trading floor. I'm like, this is for me. Besides the fact, that you have an unlimited income ceiling if you figure it out. It's opportunity to compete every day, and that's the way I'm wired. I just want to I want to beat who's ever next to me. That's just how it is. So I started at T3, and that's where I learned kind of the fundamentals of my trading. And I'll always be grateful to T3 for all the lessons I've learned. We would come in at 7 a.m. and market opens at 9:30 on the East Coast. 2.5 hours early, prepare for the market open. We'd stay for 2 hours after doing tape reading classes, trade reviews, all that stuff. So it instilled the fundamentals and the principles of hard work that's necessary to make it as a trader in this business into me. So I'm forever grateful for that. But that being said, there were a lot of drawdowns in joining their firm. It was 2013. This was the ZIRP, zero interest rate era. So everyone wanted to be a day trader. So I was in a room with 200 traders, and you were just kind of a number in the system. And we joked, we called them T-Fee, T3. We called them T-Fee because we were paying 3 cents a share in and out. We were only allowed to day trade, and we were being directed to take. They didn't give us a playbook of how to trade, but there were some trades that you literally had to take. And it was mind-boggling because they weren't profitable trades, and they're all based on the tape, and they're these short-term trades that, like, you wouldn't learn anything about the market in taking these losses. You're not building yourself as a better trader. And it's not firm capital I'm trading. I'm trading my hard-earned work. So they're making me take these awful trades, and I just start to go a little nuts about it. And that's so at T3 I learned the principles of technical analysis, tape reading, day trading, how to buy, how to sell. But as far as my strategy and kind of the big picture stuff, I had to figure out all on my own.
Mm-hmm. And while you were there, were there any kind of trades that stood out to you in terms of either teaching you a lesson or, like, you know, helped you kind of find your way and turn a corner? And do any kind of trades really resonate like that?
So, you know, it wasn't that, you know, there were these great trades that made me change. It was the awful trades that we were kind of being forced into taking. And we had to take these stepper trades. Have you ever heard of the stepper?
I haven't.
That's good. Good. I'm glad that word puts fear in my heart to this day. I swear to God. So here's what a stepper is. And this is an example of a tape trade. So again, I'm in a room with 200 traders. You see a 1 million share bid come in at let's say price is $50, right? You get up and you scream, or no, you see him step, meaning the bid goes 50 to 50.10. And you get up and you scream, stepper! And everyone in the room has to, stepper, Tesla, whatever it is. Everyone in the room has to take this trade. You have to take this trade or else you're going to be berated. Oh, you're making 25 grand a month? Oh, you're not. You don't have it figured out? Like, what are you doing? Take that trade. You take that trade. We made it. You didn't, you know? And it was a very different time. This is like before the woke stuff and nice workplace stuff. Like, they were really, really berating you about this. So back to the stepper is you see that stepper step from 50 to 50.10, right? You buy 1,000 shares. You see the stepper step from 50.10 to 50.20. You buy 1,000 shares. As long as you don't see that stepper printing his size. He might have 1 million shares. He might have 10. He might have 20. He might have 30. You don't know. Mm-hmm. So every time he steps, you buy 1,000 shares. You buy 1,000 shares. And as soon as you see that 1 million share bid start printing, you scream, printing! And you have to mark it out. And you just have to mark it out. But here's the thing. You're battling 200 traders in the same room for that same liquidity. So here's what happened to me on the day that, like, completely changed my trading, changed my outlook on life. A stepper trade happens. I have 10 grand in my account. I'm buying 1,000, blah, 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 blah. Printing, boom, I mark it out. I miss the out. Thing spreads down $1.20 or whatever, and I take a $1,200 loss when I have $10,000 in my account. 12% loss, and it's not like this is firm capital. That's the part that drove me so nuts. It's like, this is money I had to work really, really hard for. So that was just like, okay, they don't have my best interest at heart. I have to find it on my own. I learned some great executing principles, but, like, as far as long-term profitability, it wasn't in their best interest to create that for me. They were more interested in getting my trading fees. I could understand that. I don't know how the business is now. I don't have anything bad to say about them. I learned a ton. But so after that moment, it was like, that was my, like, kind of aha moment to change, where I was just so pissed off. So I started scouring the internet, and that's where I found Dan Zanger. I joined Dan Zanger's chat on the low in 2013. I'm at T3 Trading, like, talking to Dan Zanger. What's up, buddy? So how he trades is he's a breakout trader, and this is the first time I ever really saw anyone fully focusing on swing trading. Mm-hmm. So I'm a day trader at the time, and I'm like, okay, swing trading. But where I see he buys things what I would consider as late. I'm not saying he's made many, many millions and he's got his strategy figured out. But from a point on a chart, let's say a breakout's at 50, he'll buy small at 50 and then start buying 30,000 share blocks, 51, 52. It's like that I can't even imagine that. That's amazing to me. So what I tried to do was, okay, I have this style where I'm very aggressively day trading. If I can combine that with kind of Dan Zanger's kind of breakout trading, where I position myself for breakouts, then I'm going to be rolling, right? And I did see immediate progress in that, and then it kind of changed the way I look at things, where I was trading, before that, I'd be trading 10, 15 names a day, just intraday setups, just BS, absolute BS. You don't want to be a day trader. If you take one lesson from this, it's don't be a day trader. It's a horrible life. But then, so I get him from Dan Zanger, and that's when I discovered William J. O'Neill. And then that just changes my life. That just completely changes my life. How to Make Money in Stocks, the greatest trading book ever written. If you just study that book over and over, you can find profitability. You can figure out a way. But I'm not the kind of guy who can just, you have to know yourself. You have to know your personality when you're trading, right? I'm not the kind of guy who can just, sit in 4 positions for, weeks on end and just not touch the keys. I'm a very active trader, and I know that. So what I do is I try to take little bits and pieces of everybody's style that works for me, and then kind of try to form them to my own style that fits my personal personality. Like I can only do what works for me. I know how I work. There's nobody knows how I manage my feelings and stuff better than me, and what affects me, what makes me mad, what makes me happy, what makes me sad. All these things all play into who you are as a trader. So that was kind of the big aha moment in developing my size, was taking that huge stepper loss, right? That eventually ended up being the best thing that happened to me because I found Dan Zanger and William J. O'Neill, and then that's when I got into the fundamental aspects of trading.
So you're pairing the intraday techniques, entry techniques that you learned day trading with kind of the higher time frame stuff that Dan Zanger looking for the breakout, getting in a little bit before the breakout, and then riding it like a swing trade. And that's what really turned the corner for you.
Exactly. Positioning for the breakout. My whole strategy is based on positioning for the breakout. So I'm a big believer that technical analysis is not something that's difficult to learn. You teach any schlub technical analysis in a day, honestly. It's how you apply technical analysis that gives you a potential edge. So I feel like I have an edge with my entries because I use the smallest time frames. I use, let's say, 30-minute charts to get into trades that are based on the weekly chart. Right. So if I can get into a trade based on a 30-minute chart, I can have, let's say, $1 or $2 of risk. A normal technician will have to have $6 of risk. I can have 3 times the size for the same amount of risk in the same exact trade. And that's where my edge comes from.
Yeah, perfect. And outside of O'Neill, were there any other traders that you really studied and took something really meaningful from how they, trade in the markets?
Yeah, absolutely. I mean, it was kind of the classic of momentum trading. Nicky Darvis. Minervini was like later for me. I just kind of found out we had a similar style by the time I was already trading like that. Like he trades VCPs, and that's kind of like a big part of my system, compression and expansion, and that was just kind of more ironic. Let me look over here. Nicky Darvis. Honestly, I was blessed enough to sit next to a guy at T3. His name is Chris Scher. He trades for BlackRock now. He's the best executing trader I've ever seen in my life. And this guy was just such an assassin he invented what we called the double tap. So when you're about to buy a breakout, we would have all hotkeys. F4 is the market buy. You can feel the buying pressure. You see the tape speed up. You double tap F4. Double up your position, you sell that original position into the breakout pop, and now you have your full position for the breakout, and now your risk is covered. That's something that was like, holy that's edge. That's edge to me, So sitting next to him and seeing him execute, like I am forever grateful to this man for the rest of my life. But it was more so that, and then it was O'Neill and Zanger, and that was really it. And then we weren't allowed to start trading until we read Reminiscences on Livermore, and then the psychological aspect from Mark Douglas, Trading in the Zone. That's those 3 books: How to Make Money in Stocks, Trading in the Zone, Reminiscences of a Stock Operator. That's my whole like kind of basis.
If you were completely new, or like teaching a cousin or a close friend how to trade, what order would you have them read? The key books that made a difference for you.
That's a great question, actually, because I have a bunch of buddies who I'm trying to get into it who are great with risk. But I'll definitely start with Stock Operator because it's a good book and it gives you really the principles of cut the weeds, water the flowers, hold on to your winners, cut the losers. And it gives it's just a really enjoyable trading book. Then you go to How to Make Money in Stocks and you get the technical side of the game. And then you got to go Trading in the Zone after that because everyone's a disaster if they don't learn the psychological aspects, the biggest part of trading. And it's like the most under talked about.
Yeah. And you mentioned fundamentals from O'Neill. Is that where like themes and like the story behind a stock kind of came into play? What were the big takeaways for you that were, aha moments when it comes to fundamental analysis and pairing that with what you're actually trading on the charts?
Right. So the end in Can Slim was like life changing, right? New product, new whatever. And to me, that's theme. And I was trading themes before I even knew what they are. A lot of times with trading books, what you find out is, at least in my experiences, it's not necessarily new information. It's confirmation on information that gives you more confidence to kind of load setups or have more confidence in them or put on bigger risk, right? So I was trading themes before I even knew there were themes. I was trading 3D printing stocks. And do I think that Triple D or VJet and these things that were the only reason I still have a career today. Do I think these things are curing cancer? No, absolutely not. But am I understanding the price action of supply and demand and why these things are going to keep going higher? Yes, that's completely what I understand now. We're seeing it right now with OKLO, for example, still ripping higher. I wonder if today's the top. Quantum computing, these are just themes. These are themes. And now what's so crazy about this in particular market is we're so theme driven. There's no reason to trade any other sector besides what's hot. I'm normally trading most of the market. I don't want to be a beta trader, it's called. If hot names are in season, you're doing well. If they're out of season, you're doing bad. We had a day of reckoning at T3 once, and we all they put us up on the wall, and they're like, you're all beta traders. If high beta is working, you're going to be good. High beta is not working, you're going to be awful. So I try to trade all sectors, but right now I'm just trading hot themes, and it seems like there's no reason to do anything else.
And I want to dive a little bit more into your journey. So obviously you left T3, you went on kind of your own journey, develop more of your style. What were some of the biggest mistakes you had to make, during those years of transition as you're learning the new methods that, taught you really important lessons about, the system that you actually had to develop for yourself to fit your personality? Were there any big mistakes that, come to mind?
It wasn't more so an executional mistake. I had a really rough time where, all right, so I figure out I finally achieved profitability in 2015. I'm psyched. I'm pumped. It's like, when you start finding success after 2 years of just, and it's not like I didn't have a lot of winners. I had a ton of winners. I was just taking so many losers come trading 10, 15, 20 names a day. So I finally begin to find profitability, 2015 going to 2016. And then my dad gets diagnosed with stage 4 cancer. And I told you in the beginning how, he was the one who directed me to kind of, go to college where I went. Every decision I made in my life, it was just kind of, what should I do? Do this, So I feel I'm losing him, and this is when I am profitable and I have a lot of confidence in my setup. But my psychological isn't there yet. I don't know this yet at this time. So I just become a disaster. I'm going psychotic. I'm just losing thousands, and I'm just I'm going physically crazy. I was a horrible person to be around. And I actually had to quit trading for a little bit. I had to quit trading. I quit T3. I took a job with a company called Capital Economics. Now, remember, I told you my dream in the beginning is to start a hedge fund. So this company, Capital Economics, I'm smiling and dialing. I'm selling macroeconomic research, cold calling. It's the most brutal job. We got to make between 50 and 75 calls a day. And I'm calling up these hedge fund managers who I want to be in life, and they're slamming, all day. I'm just getting the phone slammed on me. Meanwhile, I'm still trading like crazy. I have to gravitate towards options because I have a smaller account. And, but I finally start getting traction again. And then I'll never forget this day. My dad's at Memorial Sloan Kettering. I'm trading in T3 down in Battery Park, a few streets off Wall Street. So I'm working at Capital Economics. This is Midtown. And I have this day where I make $12,000 in Regeneron. I have a $50K base salary at Capital Economics. So that's like 3 months pay, right? So I'm like, okay, I'm ready. I'm ready to get back. And I sprint. I get to Memorial Sloan Cancer Center as quick as I can, Upper East Side. And I'm telling my dad, and my biggest goal in life is to have my dad see me be a success. That's all I'm chasing. That's it. He said, I'm proud of you, blah, blah, blah. And this was Monday. And then he ends up passing away Wednesday. And it was just this devastating moment that I just changed. I just changed as a person. I look at life differently. I looked at everything I was doing. I used to be like a very, very social guy. I used to, not to say I'm not now, but it just turned me into, I got this animalistic focus. I was like, all right, let me sit down and really figure out what I want to do with my life. So I took a few weeks off. I quit Capital Economics. I never stepped foot in the door again. I just can't. I just can't step foot in that door again. And I sit there for 2 or 3 weeks. I'm like, okay, I'm going to do it. I'm going to become a great trader. There's nothing that's going to stop me. I go back to T3. And this time my experience is different. So, on my way out the first time, I'm such a psychotic disaster. I'm not sitting at a desk this time. I'm just kind of in the corner by myself. It was a little weird. But I know that I'm just using them for leverage, and I'm not getting the positive aspects of being on a trading desk. I'm just in the corner. So I just go crazy over 3 months. I turn 25K to 90K, really quickly. And then I eventually get up to 100K when I leave. And then that's when I leave. And then that's when I go off of my own and started to find some success. But it was I listened to this Will Smith interview once. It was on a Rap Radar interview, and he talks about how losing his dad was the best and worst thing that's ever happened to him. And it's like, how could that be the best thing that's ever happened to you? I'm listening to this interview at the time, and now I really have a deep understanding of it, because I was never ready to take these steps on life on my own. I was never ready to make a move. I was never serious. Like, I was making some money as a trader, but I wasn't obsessed. I wouldn't have the psychotic ambition, right? I was still going in at 7 a.m. to 6 p.m., but everything changed and got really turned up after that. So I really became who I needed to become in life from losing my dad in that experience. It's the most brutal thing I've ever been to, but I completely changed as a person. I just got such an animalistic work ethic, like nothing's going to stop me. I'm going to make this happen no matter what. And so it was going through that horrible period is what made me really dive into the trading psychology side of things, which is the only reason I have success today. Literally, the only reason.
Was your dad a trader at all? And was there any advice he gave you either with your trading or maybe it was with sports that really kind of sticks with you and, you know, you still kind of rely on or fall back on sometimes? It
was just work. He was a guy who led by example. He wasn't, you know, a rah-rah guy. I'm a rah-rah guy. I get that from my mom. Like I like pumping people up and stuff like that. He just leads by example. Like he was the type of guy you could never tell him anything because he was handling everything. Now that's who I want to be in life, right? You can't tell me anything if I'm already doing everything, right?
Right.
So it was more just kind of following in his actions over anything he told me, and it's just work. That's it. And we're really blessed. The thing I find so crazy about traders, I work with a ton of young traders, and they're like, they don't want to scroll 100 charts at night. And it's like, you know what I had to do to get here? Like that's kind of the energy I have. And we have things so easy. And I talked about in the beginning, Pitbull, I was reading the book. He talks about, he's a great trader from the 80s. He talks about every night he would have to calculate the moving averages on a chart just so he can read a chart. We have all this stuff. I started diving into the Deep View theme tracker because you guys keep me on the waiting list and I can't get in. I have to use my buddy Casey's.
We'll get you in. Yeah.
I appreciate that. I got to use my connects to get in, but I'm sneaking in, saving the $30. But for example, like a theme tracker, like you don't realize how much of a cheat code that is into the research game. You know, how I started versus what I do now, it's just completely different. So the work ethic side of things that should be an absolute given. Like you have to want it in this business. We get to sit in a chair, press some buttons, and we can have everything we dreamed if we do it right. It's just it's still insane to me every day. You know, so I understand how blessed I am just to be able to do this for a living.
For sure. And I want to get into your strategy in just a minute, but you know, just talking about the work needed to, you know, get to become the trader that you want to be. What were some of the key things that you were doing? Was it studying big winners from the past? Was it studying your own trades? What kind of had the biggest impact in, you know, you developing as a trader?
I would say definitely studying my own trades. So the most underutilized and under talked about thing is how important journaling is to trading. So what I do when I journal, and I got this from my buddy Heaven, shouts out to Heaven. I screenshot every single execution I make, and then I put it on trial at the end of the day, and I write a little blurb about how I'm feeling, because your emotions in the moment can trick you.
Yeah.
So it was a deep understanding and a deep studying of myself and my journaling. And then as far as what to study, I went on Dan Zenger's website. And I believe you can go back to 98, and he has all his newsletters up. And that was just eye-opening to me, because you go bar by bar and look at how these things trade, and then that allows you to trust moving averages on a trail, for example, and stuff like that. It allows you to trust the strategy better when you see these trades play out over a long time. Remember, I started on the smallest time frame. I could never even imagine holding things for 3 days when I started. Yeah. So seeing someone else's success and studying that is really what was instrumental to my growth.
Perfect. And yeah, let's dive into your methods now. And, you know, we're going to dive into a lot of your trades, which you prepped. But first, you know, just from a high level, how would you describe in maybe a few sentences your overall strategy, overall what you're trying to do, you know, and how much of that is technical versus fundamental, if you had to kind of put yourself on, you know, on a spectrum there? Yeah.
Yeah. And I like to simplify things as much as possible. The more you can keep simple, the better off you're going to be. So I try to keep it very simple, and then I add complexities, which I call layers of probability. So my entire strategy, it could kind of be defined with like 6-ish broad categories. It's a top-down charting approach, meaning, you know, the weekly is most important, weekly or monthly, then down to the daily, and then down to the 30-minute. And my edge is manipulating small time frames like intraday charts to find quote-unquote perfect entries on weekly technical trades. So layers of probability, meaning fundamental factors, thematic factors, time frame continuity, you know, when things line up on a weekly chart, daily chart, 30-minute chart, stage analysis, Stan Weinstein, TraderLion, I'm here, it's crazy. And then just very simple of supply and demand, compression and expansion, and then inflection points, and then everything for me is based off risk reward.
Yep.
Trading is largely a simple game of math. My first boss told me that when I went through my first losing streak. He's like, I just want you to go home and do some math. And the math was like, all right, I'm risking this much. I'm taking this trade. My win percentage is this much. I'm taking this many trades. And I'm just doing the math. And then that's where I'm finding out like, oh my God, I'm taking too many trades. I'm doing this. So it's always about having the mathematics on your side, the simple aspect. So what I go for, I only enter a trade if I think I can make at least 5 times my risk. I'm just not going to take a trade for that. And then secondly is I have something I call perfect entries only, meaning, so I know myself. I know myself. I can't tell you that enough. That is my biggest strength, is that I know myself. And I know what I'm good at. I know what I'm bad at. I know how much I love to trade. It is not good for me. As humans, we are designed to fail as traders. The sooner you understand that, the sooner you can have success, because all the things I'm feeling don't necessarily want me to succeed at trading, right? How badly we want to just sell when we see profit, for example. So the reason I use perfect entries only, it creates like a governor on a car, right? Where, you know, like a Ferrari or whatever, they only let you go 120, you take the governor off, it goes like 160. The perfect entries only is like the governor I have on myself. So I'm not just, you know, that demon who trades 10 to 15 names a day. He's still in here. Like he comes out sometimes and I got to put him back in the box, you know, it's like, you know, and I just know myself. So I really just, keep really close tabs on my emotional state and stuff like that, doing these things. But yeah, top-down charting approach, layers of probability, compression, expansion, inflection points.
Perfect. Yeah, let's bring some charts to life and bring your strategy to life. If you want to go ahead and share your screen, and I know you prepped a bunch of them to go through, so I guess I'll let you pick which one you want to start with.
Yep. Oh, I'm starting with my dog, Tem.
There you go.
Starting with Tempest. All right. Okay. So I saw that when you posted, like, we got Shake coming on. Is there any questions you got? And a lot of the answers were like, you know, I want to know what he did in Tem. I was so big, and I was going a little bit crazy on Twitter, and I'm joking around on Twitter. Like, I'm posting, like, it'll give a false breakout, and I'm posting, like, Stewie Griffin, you know, like, in the manic, the GIF, and everyone's like, yo, like, are you okay? Blah, blah. I'm like, I'm just joking, guys. But I want to go through this trade and talk about, and, you know, this is the only trade I'll talk about size. So, you know, you can get an understanding of why I was going through what I'm going through in Tem. So let's bring up this Tem chart. All right. So we got, and now it broke out. Now it did everything we wanted. I love trading IPOs and recent IPOs. And what's funny to me is you go through trading books and things like that, and they tell you not to trade IPOs. Because if you look at IPOs over aggregate, if you look at 1,000 IPOs, probably 900 of them suck, right? That's, you know, probably 900, just their high of career is IPO day and they sell off. But if you find the ones that are good, there's so much opportunity because they experience what's called price discovery. There's no support and resistance. So when they break out, it's just open air and they have these crazy moves.
Yeah, I just made a model book of a bunch of IPO moves, and, you know, the ones that go, there's often, you know, a 30 to, you know, 50% plus move, you know, coming from the IPO base that's tradable. Yeah, this is a great example.
This is the first swing trade I ever took.
Yep.
August 28th, 2014. I bought this GoPro. Kicked probably 60% day one. But, you know, I was in it, and then I learned about high and tight flags here. Like, you know, I was with a more senior trader, and he's like, nah, look at all the volume this thing's got. I'm like, look how overbought it is, blah, blah, blah. I was like, holy shit. And then I saw it break out. All right, sorry. Going off on tangents here.
No worries.
I'm a guy who loves to go off on tangents.
And right. GPro, it has a characteristic. It's got demand off the opening price. It's the first few days. That's why I see, you know, a bunch, if you go back and say those IPOs, is the first few days there's a immediate ramp up and then it consolidates, and you see a lot of those setting up. And then
Okay.
look at the tightness. Look at the tightness. August, early August, right there before it starts pushing up. Yeah, look at
So
that.
this is something that's very under talked about. Thank you, Richard. I'm sorry, I'm going to go off on tangents all
No,
day
this
here.
is good. Let's do it.
Yo, IPO bases at lows. This is such a sick setup.
Yep, CRWV.
Man, I messed this one up. I messed this one up this day. But CRWV, IPO base at lows. And where I first learned this, oh God, I'm going to be scrolling all day.
We'll put your...
This was my guy. I talked about my guy, Chris Scher. I saw him take this trade and I was just bewildered. I couldn't believe it. Look at this look at this little base off lows in Twitter and look at the move it gives you.
Yep.
So look at this inside day. You're buying 41.60. Let's say you're using that inside day as a stop. You have $1 risk. Runs to $74, $75, in a couple weeks, 30 R risk reward. Once I saw that, it's like, it's crazy to me how people don't gravitate towards IPOs more and more, seeing this kind of action. It feels like the best kept secret of the market to me, actually. So,
yeah, bring up one more. Go to shop 2015, I believe.
Man, we're having some fun here. All right.
Yeah.
Oh, we were going on script, I'll have some fun with you today.
That was good.
Oh, this is sick one.
Yeah.
I don't remember this one. I guess
it didn't last that long, but look at that tightness right there.
This name, Split?
Yeah, 10 for 1. So it was...
okay, so this was $30 at the time.
Yeah,
right?
yeah.
I'm like, this thing IPOs at $3. What are we doing here? Wow, this is sick though. Look at this. Look at this entry. Holy shit. That's a thing of beauty right there. And that's alpha right there. There's so many of these and people don't trade IPOs for whatever reason because they read in the textbook that it's like avoid IPOs and it's like you're nuts. You're missing out on such easy money. And we'll talk about IPOs. The first one I'll go over is the CEP actually because so we can get back on track a little bit.
Yeah, sorry for making it work.
You're good. You're good.
Yep.
It's me we got to worry about. I'm going to go on tangents all day, buddy. All right. So that TEM trade, it's like 5-to-1 risk reward is my guiding light, right? So it's hard to achieve 5-to-1 on a swing trade in a few days. It's going to take you a couple weeks to do it. You're trading IPOs. These things are such pressure cookers that, you can achieve that very quickly because they break through highs and they experience price discovery. Sorry, you lost me for a moment there. So here's a trade I took in this CEP this year. And this is something that I don't see a lot of traders really do. It has this really, really tight consolidation on 30-minute, 1, 2, 3 inside days. I simply buy through the high inside day here, more easily seen on the daily chart. And if I'm moving too fast, I have a really bad habit of doing that. So slow me down, brother. But here, all right, we get this sick move up. Like you said, those ones that have that initial, that's not something I really notice is they need an initial move up.
Not all of them do, but I like to see that. It's just an added layer of probability that I like to look for. Yeah,
Okay, yeah. I like that. Is layer of probability something everyone uses?
No, I just copied your language real quick. Yeah.
Let's go. Okay.
So this one, SEP got on your radar because of that huge move on, look at the volume coming in there. And then it goes quiet, dead tight for 2 days. Yeah.
Right. And it's the back-to-back inside days that has me buy this, right? Yep. Compression and expansion. Supply and demand, right? I know that buyers are very strong here, but now they're meeting sellers right here, these inside days. But because I have this information of this strong move up, I can have a lot of confidence that this is going to break to the north side, to the upside. And once it breaks these inside days, this is buyers meeting sellers. This is like a tug of war, right? And it's like whoever wins the battle, it's just boom, it's going to explode up. And because we have the information that this already made a strong move up, this is why we want to get long this name. So I'm buying this through the inside day high here, 34.50, just against 30.50, these lows. And I'm selling it here into strength up into $60, whatever it is. 5-to-1 trade. I get stopped out the next day, but I end up with a quick 4-hour trade in a day and a half or 2.5 days versus achieving that in a swing trade is going to take you a lot more time to do it. So these are like amazing fast money rippers that are just great cash flow trades to me, these recent IPOs.
So you see the setup on the daily, then you go for the 30-minute. Walk us through your process. So the daily pivot, the daily buy point is that inside day high. How do you use that and trade off of that and look for maybe a slightly earlier entry on the 30-minute? Walk us through that.
So not this time. This is an earlier entry time. So
gotcha.
Earlier entry time. I'll explain. It's cool. I appreciate you asking. So this is just a pure like consolidation breakout setup.
Gotcha.
All right. So I'm very, very simply, and for the front running and the kind of the positioning and the early buys, those are more for bases and things like that. I'll get into the specifics later, but But here I'm just simply buying through the inside day high, 34.50 buy stop. That's it. That's it. Stop 30.50, stop 30.49, 1 cent below the low of day. Gives me a nice little rip. I'm not selling any yet because I don't achieve my 5 to 1. And then here early in the day, I'm selling up here in 53, 54, whatever. And then it kind of breaks this area down. This is where I'm completely out of the trade. So on most trades, like these trades specifically, and then I'm out of the trade there. So these trades specifically, I'm going to be much more willing to take profit into strength more quickly because I understand
they're very fast. Yeah,
they're very fast. And they're as fast as they go up, they can come back, as this one did. So, if you're not prudent with taking profit in this one, it's just a failed trade for you versus me. I'm having a 4R trade. And that's kind of it. That's kind of it with that one.
Perfect. And I don't even know if this obviously you were in the enhanced growth division in 2024. What are you trading primarily, shares versus options? How would you have both an option position as well as, shares? How do you typically, set up your positioning when you've got a trade that you want to put on?
So me and Norm got in some major beef over this, if you want to talk about it. Because I'm not an options trader. I'm trading stock 99% of the time. The only really times I'm trading options is if I feel like the market's going to pull back and I don't want to sell my positions. I think I have great positions on. I'm pretty much going to buy. I'm going to buy some puts about a month or a month and a half out at the money for pretty much. I'm still messing around with this equation. 25% to 33% of my open P&L because I feel like if the put works out, I'll make 300 or 200%. I'll make 3 to 1 risk reward, and that'll cover the losses that I'm giving back of my positions. So I had a little bit of, or if I'm taking an earnings gamble, which I do 1, 2, 3 times a year, I'll buy some calls into a report I like, but I never do that. So I'm showing Norm my trades, and he's like, "Oh, I didn't know you traded options. You're actually in the enhanced growth division." I'm like, "Norm, don't you do this to me, brother. This is my shot." Whatever. So he put me in the enhanced growth. But I'm not. I'm trading shares 99% of the time.
Gotcha. And you're just using options selectively for protection, or I gotcha. Cool.
Yeah, or earnings gambles. Yeah, that's it.
Cool. Awesome. So I think you said that was it for SEP. Do you want to go back to TEM and walk through that?
Let's do TEM.
Yeah, let's do
TEM. So, all right. So there's a couple things I want to talk about with this setup. There's 2 things I really love to do. Friday swings. This is kind of my thing. I haven't ever heard anyone talk about this. Friday swings. So when a name is setting up with a great weekly chart and it looks like it's going to be good on Thursday, but it's given a daily setup that Friday, or it's going to go into the weekend looking like it's like a great setup, I'm going to buy it on Friday. I want to front run all the traders who are going to see the chart over the weekend and get so excited about it. And then the second thing is all right, when a name has a range move, you buy the first pullback. Okay. So this had a range move, support to resistance, right? And it's in a consolidation. The name has a range move and it's in the consolidation. You buy the first pullback. I'll show you a better example. Is this D-Dog from last year. It's like my best trade last year. So a name is in this. It's in this macro consolidation, right? These 3 days, we would consider this a range move, support to resistance. But in no world can I buy day 4, keep a stop here, and achieve 5 to 1 risk reward. No chance. So I'm looking for the first pullback that's supported. That's what I'm looking for confirmation. This is my confirmation the trade's going to trigger. That's my confirmation right there. So on D-Dog, I'm looking for this first pullback. I'm buying through this inside day high. So I'm buying. We didn't even plan to go over this one, Richard. So I'm buying through the inside day high here, 125 against these lows. The inside day high was 127.60. So I simply have a 127.60 buy stop, and my lows are 124.79, the prior day's lows. So I get in on that very, very tight risk, and I ride this out, and it becomes a huge, huge winner for me. But I'm sure a lot of traders did well buying the technical breakout, right? It still worked. But I had 4 times the size against support. And the most important part is I'm buying against an area that I'm still told if I'm wrong. That's the most important part about your stop location, is that it's got to tell you you're wrong. So that's where my edge comes in, is I'm going to position myself, but I still have to be told I'm wrong if I get stopped out. All right, so back to TEM. So this TEM, we're all staring at this TEM. It gives this great IPL move. I don't trade it at all at this point. I don't trade this. I was doing some research, studying back. It's funny that it did this.
The Nancy Pelosi catalyst. That was the gap.
Is that what that was?
I think that was, yeah.
Okay, so it makes that candle, and then it just rips. That's fun.
Yeah,
I wish I was-
the Nancy Pelosi I think was the gap up day. So the big volume day that like ignited it. That was the gap up. No. You back where you were.
Oh, this right here.
Yeah,
This.
yeah. And then it makes a higher low, tightens.
Oh God.
Yeah, and goes.
Talk about a dirty candle. This is such an A+ setup, and then that's how they do it that day.
And then it goes the next day.
And then it goes the next day.
Yep.
Oh man, I'm probably getting shaken out of that one, honestly.
Yeah, same.
So, all right. So, at this point in the TEM journey, let's look at the weekly chart. All right. So we know it has this sick IPO base, and how I'm looking at this is the base highs $80. You want to go to these highs eventually, 91.50. The base low is $30, $60 range. So $60 on top of 90, that's 150. That's how my measured move for this trade is still 150. So if you look at all these rips on the weekly chart, it just kind of rips to this resistance. It never gives a chance to power up. So then, okay, now it's ripping up. It has these 1, 2, 3, 4 weeks, and now it's beginning to consolidate. So now it's firmly on my radar. All right, back to a daily chart. So now it's firmly on my radar, and it does this, and I'm like, and I'm kind of kicking myself. I'm pretty sure. I don't remember. I'm pretty sure I was in it this day and just gave it back. But then it has the Kerrisdale short report, right? And it just gets smoked. And then 2 days later, they come out that the whatever, Fugazi, Kerrisdale sucks, whatever it is. But more importantly, the stock had a range move within a consolidation.
Right.
That's the important part. So now I'm looking for this first pullback. And now after it has this range move, I know that the weekly is going to look like this. Some sort of semblance. Nope, we're not there yet. Here it is.
Yep.
Right? So now, like and now it's not as strong coming into the Thursday. It was like down here, let's say. But now I know that if this gives a move or an entry on Friday, I'm going to really position myself well to kind of catch this breakout. So Friday swings, if it's going to be if it's going to look great on a weekly chart. I have a few trades where I go over these Friday swings. It's such a nasty entry tactic. And then buying the first pullback after a range move. So here's the day I entered, but I wanted to talk about this entry, and this is what I talk about perfect entries only. This is the entry I'm very, very proud of because I put on such ridiculous sets. I put on 5R risk for this trade. I never do that. I'm a believer in that. Sorry, man, I'm losing my dates. Where was it?
You're good.
It was June. It's going to 15 on June. All right, so many people are of the ilk and the kind of belief that. There it is. So, if you oversize yourself, you are going to get yourself into trouble. You're going to make emotional decisions. Absolutely. That's absolutely true. I am so psychotic about trading. I believe I can train myself to deal with the emotional pitfalls. I have 2 goals every year. My 2 goals every year are to expand my time frame, most importantly, because I started as a day trader, and the more I expand my time frame, the more money I make, the better life I live just holding positions versus, spanging the keys. And number 2 is to get bigger every year. I want to get bigger. Remember, I'm telling you, my goal is the hedge fund at the end of the day. I'm going to be trading 10x size if all goes to plan. So what I'm dealing with P&L wise and this emotional stuff is going to be nothing in the bigger picture of the thing. So I am very intentionally going 5R size in this name. So we have that pullback day, and I'm looking for the first semblance of support on that pullback after the range move, right? Here's the range move on a 15-minute chart. Here's the pullback. And now this is Friday. And if it opens up strong, this is when I go all in. I'm going heavy risk. I'm going 5R risk. So this is where I start buying. I buy 60. I buy 7,500 shares at 60. And then through the confirmation highs, I buy that pretty quickly off the open. And I buy another 7,500 shares, 61.20. So my price is 60.60. I'm giving this to $58 or whatever these lows are, 57.79, I believe it was. And I got 15,000 shares of TEM. Do you know what 15,000 shares of TEM does to a man? Do you know what 15,000 shares does to a man? It's psychotic. It's crazy. But listen, I am trying to train myself to be able to handle these swings and trade it right. So, all right, I get the move I want, and I get that Friday swing, right? And what I try to do is I try to front run all the Twitter traders. If I'm thinking it's like the big idea of the Friday swings is you see traders going nuts over the same charts on Twitter every weekend. So if I can already be in this move for it, and it's so hard to trade technical triggers to me. Like they make the action so difficult, so choppy. They want to wear out retail traders. They want them to take a loss there so they can rip it and have retail traders chase and create momentum so they can make more money. You know, whoever the hell they is, institutional traders. But here is, so I have my 15,000 shares of TEM here, right? And now this is the most A++ setup. So we got the theme on our hands, AI healthcare. The fundamentals are looking good. It's a Nancy Pelosi stock. It's a ridiculous layer of probability, but those things are working. You gotta follow that hot hand, right? It's in an IPO base. This is my favorite setup. It's in this tight consolidation.
It's AI. It's all that stuff.
AI, it's got everything. It's got everything. So, I'm still a big believer in this name. I just learned the hard way. It trades like absolute, trash. So here I'm coming into Monday, and this is this absolute A+ setup. Here's the weekly chart at this point. So here's the difference. Here is the major difference in this time versus the other times. This is why I'm going to 15,000 shares. This is why I'm going max risk on for this one. Look at this run up time, run up. The stock never had a chance to power up. So I'm a big believer in powering up in consolidations. The stock powers up in a consolidation for a few weeks, and then that's when whoever needs to buy it gets. Look at all this volume. Look at all this volume, right? This is an absolute A++ setup. This is a pressure cooker to me. This is buyers meeting sellers, and now it looks like it's going to absolutely explode. So let's go into the trade, right? And then so Monday comes, and I have my 15,000, and it gives me a perfect entry tactic. And what I really aim to do is I want to be very mechanical. If I see something that fits my strategy and I'm going to take it. That's why I say perfect entries only, because I'm dying to trade. I'm dying to put on risk. But if I see something that's considered a perfect entry only, I got to take it. So let's go to the 15-minute intraday for that next day. It was the 64 trigger. Check. 64 trigger. That was August.
I think still back. Yeah, June, right?
That was later. June. Sorry, man. You're going
to
have to do a lot of editing. All right. So this is how it opens Monday. It flushes the open, and I love buying new intraday highs. I love buying new. It's a mechanical thing. If I'm looking to buy 64 and I see it open like this, and this is any name, and this is an amazing entry tactic, I just put a buy stop at 64. And if it triggers, I'm in, and if it not, I don't care. Right? I don't care if I'm not in, but if it triggers, it's going to give me a perfect entry in my system. So I add another 3,000 shares. So now I got 18,000 shares. And my price is about, my original price was $61.20. I add 3,000 about at 64, $3 later, but I add 1/6 the size. My price is around, I don't know, $61.50 at this point. And now that I get this extension, this is a trigger for me. And especially that it bounced off the 20 EMA here. Now my stop is this kind of 60, 86, 20 EMA area. Mm-hmm. So this is like my system in a nutshell. Anyone can take this TEM trade. I'm going to take this trade and get so much size and such tight risk preparing for the move that now my out. So my original risk on the trade is 5R. The trade triggers. Now my stop is the 20 EMA. My size is down. My risk is down to 2R. But I have 5R size. That's the edge. That's the complete edge of the system. I'm going to be able to make, 2.5 times as much as the next guy who just trades it as whatever. So here's how I manage the trade. And, everyone's making so much fun on me on Twitter. So I have the 18,000. I scale out of, I'm always taking some off the table into strength. So I'm still figuring out every day I work on the equation of how much to trim and how much to hold. And we'll talk about some home run setups later where, I didn't hold enough for the run. And it's tough because I wouldn't say I'm a home run trader. I pride myself on being able to make money in every market. So I saw someone talking on Twitter today. It's like, should you take profit into strength or should you just ride out positions? And the funny thing to me is like traders have such short memories, like 23, 24, 25, very big momentum years. Awesome years. I want to see how these guys did in 22 who are just never taking any profit. So I feel I'm going to make money in every market. And maybe I'll strangle my gains a little bit in the, the absolute breakout home run markets, but I'm going to do much better in the, the more choppier phases of the market. So I get my first kickoff a few days in. I take a third off and I sell 6,000 shares. So I'm down to 12,000. I book, I sell that for $10. So I book 60K on the trade. Now the trade's free and I can manage it, but I still have 12,000 shares. And this name's up and down. $6 this day is $6 this day. That's a lot of money. It's a lot of money flying around. And meanwhile, I have 4 or 5 other trades going around. So if I'm going nuts on Twitter about this, there's a reason. There's a method behind the madness, right? So the trade goes along, and I'm just holding it. And the toughest part about these trades is you got to watch your P&L come in every day when they fail. That's the most brutal part. It's like, yeah, I gave back this, but on this day, it was minus 150K or whatever the number was, because it's slowly 20K, 20. It's just like a bleed. So we don't want to stare at our P&L. It's the worst thing you could do. I try to block it out as much as possible. But here's how I trade it is it falls back on me here. I almost get stopped out this day. And I'm like, oh, now this day comes and I'm so excited. And I'm like, oh boy, it's TEM time. It is TEM time again. I'm not re-adding because, this name has given me hell the past 2 weeks. But now this is a perfect entry to me. We got the breakout move, pull back. It shook out the 20 EMA, gave a tight inside day. I believe Oliver Kell calls that a wick play. Love that dude. He's awesome. I learned a ton from him. I've never learned so much from somebody my age. I got a lot of respect for that dude. A wick play, and I think we're about to be back in business. All it needed to do was shake out the chasers, and now we're going to be at $100 in a few days. I'm going to be rich, So what's it do? Oh, painful day. So it gaps up, breaks out, and then closes below the 20 EMA, and I'm just completely out of the trade. So my trade is, and this is the only one I'll talk about size in. I'm not trying to be that guy, but people were shouting me out on TEM, and you got to realize what this thing put me through. So I get out there. My price was what, 61.60 or so. I get out finally 65, 66. I end up booking another 50K on these sales. So on a failed trade, I made 110K, and that's like the proof of the pudding of my system. That's what I can do really well. So, and then we'll see a ton of names that go like crazy, and I strangle gains and stuff like that. But again, it's because those are outlier trades and this is more the norm, and I'm trading a lot. I know my personality. I'm a gunslinger. I want to trade. I'm dying to trade. I got to chill out. I got to keep controls on myself. So in doing so, I have to trim into strength. So in this example, saved me a bunch of money in doing so. So that was a good one. And then I was also in TEM for this one later. I guess I'll just keep going over TEM over here. Let's do it. All right. So then it has the earnings. Oh God. And I buy. So this day, so I tell you, I take a few earnings gambles every year. So this day I'm like, you know what, boys, it's TEM time. It's TEM time. And I load the boat. I buy like 15, 20 grand worth of of 80 calls for end of September. And it's like, if I get the earnings move I want, I'm gonna kill the trade, whatever. Earnings day comes and it has this move, and I'm like, all right, don't sell those yet, because I'm not an options trader, so I don't really want to lose on options. So then this day happens, and let's look at the price action from this day, because it's like, oh, just a little inside day, but you mother effers don't know how TEM trades if you think that's just an inside day. So where was it? Do you remember the date for that, my friend?
Yeah, you're right there.
Oh, okay.
Yeah.
All right, yeah. Okay. So on that little inside day, this is the price action. This is dealing with TEM on an average day. Rips it, strongest name off the board, huge volume. All we need, boys, is that volume to stay consistent and we're in business. And what happens? This is the rest of the day. Dead. Nothing. I was the only guy trading it. So I sell all those options, break even at lows. Oh my God. It's like, oh my God, but I'm not an options trader. So that's not something I beat myself up for. So then the next day, when it gives an actual trigger, I just have to be in the trade. I've spent so much time, capital, and everything. I love buying through earnings day highs, right? I love buying through earnings day highs. I don't think it's very talked about. Or I think it's very under-discussed. That's just a huge layer of probability in my trading, is buying through earnings day highs, and it's just such a sick catalyst. So I buy this, but I chase this. This isn't how I like to, right? My whole system is based on not doing this, but it's TEM, and I'm so pot committed at this point. So I just buy this little breakout trade, 66 versus 62, and I again oversized myself for 3R because again I'm just pot committed to this name, and it's so my trims in this first. It's so funny my trims in this first move because I'm like, this name is in my head so hard, like. You know, I'm in it because I have to be in it. And again, it's giving me the entry that it's like, I have to take this trade. So I get down to 1R in these two kicks, and they're probably like 1 to 1, 1.5 to 1 risk reward. But like, I know TEM, and I just know what I went through a few weeks ago, and I'm not ready to go through it again. And I know you can't trade this name like a regular name because it's just so flashy and so hard to trade. So I understand at this point, it's just got to be a 20 EMA swing. It's just got to be a 20 EMA swing. So I end up just holding a core position here. And then it has sick news this day. I forget what the news was. Some great whatever news. And it's so funny. The name's breaking out at highs. Let's talk about TEM. Another example of talking about TEM. Let me get the date up. September 22nd. September 22nd. All right. September 22nd, faithful day. So here, TEM, $98. It's about to do it. It's about to cross 100. I tweet out, boys, this is what we're waiting for. All that hard work, all that patience, finally paying off. End of the day. Where do I sell it, Richard? Holy shit, I sell it at 85. I sell it at 85 at the end of the day. When a stock has objectively amazing news, and it's breaking highs and it sells off on the news, that's bad and I'm getting out. That's just bad news and I'm getting out. Yep. So I end up getting out there. And a little quick tidbit, current state of the market. I saw NVIDIA did this huge deal with BlackRock today about data centers, and they're no longer running on this kind of news, guys. Little birdies telling me to be a little concerned about this market. We're not seeing the same reactions. But let's get back to it. Sorry, that was just on my mind. I had a conversation recently about that. Where are we at? Oh, and then TEM. All right, I'll stick with TEM. And then, so I sell it that day.
Was it FDA approval for one of their products? Was that the news?
The breakout failure?
Yeah.
It was something big. I'm not sure.
Yeah.
I know the way I work, Richard, is I know just as much as I have to know.
Yep.
I don't know. I'm not an AI expert. I understand these companies in a very broad sense, but what I know is their earnings and their estimates. That's the big thing, right? So I do eventually. I have a really nice trade in TEM. Again here a little week later, and shouts out to it's pronounced Scotland, right? Is that his name? The Slingshot.
Yeah.
Shouts out to him. So I've always bought EMA-reclaims. It's a big part of my system. But then I watched his video, and he calls it a slingshot. And when you quantify a setup, just like I was talking about before, where sometimes in a trading book, we'll read something we already do, and it gives us just more confirmation, more confidence to put on more risk in doing so. So now, like a slingshot to me, it's like a huge part of my system now, because it's just these EMA-reclaims. And now that I see a big trader also doing it, it just gives me more confidence to execute it. So then they have AI news where they have some government news where Trump is looking to use AI to something. I saw ZA Stocks. Shouts out ZA. I'm going to shout out all the people I love during my short time here. I saw him post some news, read the news, and it looked like game changing. Again, I know just as much as I need to know. I'm like, that sounds like a big catalyst. So then I buy it again here on this day, just opening range breakout, 82 versus 80. And I trim into strength, and I eventually get out Friday. And we'll talk about the kind of the last Friday trading. And I want to get into how I look at risk, because I look at risk in a very different way than most people do. But so this opening range breakout trade is something I've pretty much taken completely out of my system, because I am a gunslinger and I like these sexy trades too much, and I'm dying to trade off the open. It's not good for me. There's a few times, SMCI last year, I caught off the open. Amazing money I made in that trade. I took 15 more trades that weren't SMCIs because kind of a bad habits form. So I really try to keep these trades to really special situations. And now a big factor in this is that I've already have a ton of capital in TEM. I've already made a ton of money in TEM. So if I lose on a setup that fits my system, that's fine. Fine to me, all right? So I just buy 82 versus 80 off the open. I'm only giving this a low of day stop. It's a very low probability trade, but I'm looking at, you know, the slingshot, the EMA-reclaim. These are the kind of layers of probability I'm looking at. And then I sell this one like crap because of my horrible TEM experiences. I sell these days into strength, take some off into here. And then on Friday, when we have that disaster day, I go cash. I held 100 shares, but I'm pretty much cash. And let me get into it real quick. How I look at risk. That's how very different from. And I see in a lot of these interviews, you talk about analytics on traders and stuff like that. Hold on, let me get some water. All right. So I only study myself as far as analytics go. There's only two numbers I look at. I look at my average risk reward, I look at my win rate, and then I look at my Sharpe ratio. Those are the only three things I care about. And then sometimes I'll look at time of day stats. But since I had to go through a 3-month period where I closed my broker the first 15 minutes of the day. So I would just force the habit of not trading off the open because I'm a gunslinger. I'm dying to trade, right? I got to put those controls on. So how I look at risk, and I'm a trader who goes on runs. Lots of traders like to try. I'm going to make $5,000 every week. That's my goal, right? That's not me. I'm a trader who goes on runs, and I've always been that way in my career. But what I noticed is, in the beginning of my career, I was always giving back my runs right after. And then I started to focus on it a little bit more. And then I was giving only half back. And then in the last 5 years, I got that number down to like 25, kind of 20%. And now that number is like 5-6% of the entire run. This is what I'm proud of. So September is an outlier month where things are working like crazy, right? All right, something we could probably agree on. I'm sorry. I'm so.
You're good.
Something we could probably agree on. You look at any system over the course of years and years, and let's say it has a 40% win rate. But included in that win rate is going to be times where there's 10 straight wins, and there's also going to be times where there's 10 straight losses, right? We can agree on that? So how I look at risk is during the time my system is going to have 10 straight losses, I want to have 2. During the time that my system is going to have 10 straight wins, I want to have 30. So when I get traction on myself, I'm just ramping up the risk. I'm ramping it up. And September, it was my best month ever, and I made more than I could have ever dreamed about when I was starting in a year that I made in a month. But it was because I push the gas pedal. Push until I'm told not to. So then Friday's selling happens. Friday's selling happens. And let's look at the bar. Let's look at the bar this Friday.
Zoom out a little bit to show the bar in context.
Oh my God. And I don't think people are taking enough caution after seeing this bar. It's the biggest bar we've had in this entire 6-month run. And I'll tell you, and remind me to tell you of what this reminds me of after. I have some good tips on this, but let me talk about risk for a second. So I want to push, and then I am staring at the market. And when I'm pushing this hard, it's exhausting. I'm not missing a tick in the market. On my top right screen, I have 6 screens here, 6 24-inch Acers, because Dan Zanger told me to buy 6 24-inch Acers. So on my top right of the screen, I have the SPY, S&P, and I'm just watching this all my life, like literally all day, all night. I'll sit here. You see my dog's napping right here. I'm sitting there. I'll throw on a movie, and I'm just watching my positions, and I'm watching the market the entire day. I can't take a minute off because I know myself. I'm going to go on these runs, and that's where I make my money, and then at some point, the market's going to tell me to stop. So this happens, and I'm up 30K on the day. I look down at my phone, and I look up, and I see the selling, and the interactive brokers just flashes. Yep. And I'm used to like a $500 flash or $1,000 flash. I'm up 30K. I'm down 38K. I have a 78K tick. 70. I felt 3 chest hairs grow in real time, Richard. I swear to God, it was nuts. So that's my cue. So I just start dumping. I'm going to cash. I'm going to cash very quickly, and now I'm done. So now here's how I look at risk. Now I've earned the right to do nothing. I killed it when it was easy. Dan Zanger always talks about there's a few seasons every year where it's easy trading. And our job as traders is to make money and have lots of risk on during that time. So now I've earned the right to do nothing. All right. It's not like, oh, I see this and I'm doing nothing. I've earned the right to do it. And now I don't want to give back my gains. And something I keep telling my traders, keep showing them, I keep bringing up these charts of everything that broke out, right? Look at this OKLO base. This is an amazing setup. Look at this Tesla base. This is an amazing setup. Do you see, look at this, which one, pick one for the quantum, right? This is an amazing cup and handle, right? Do you see those setups out there right now? Or have you just been conditioned to buy the dip for 6 months, so you're just used to trading every single day super heavy? And that's my fear of traders in this market. I think what this reminds me of, and then I learned this lesson because I made such a huge mistake in the competition. So here's the fateful mistake I make. And then what they do before they correct the market, it's not like charts go to shit this day. They still make the charts, whoever they is, they still make the charts look good before they sell it off. And I know this because I got so smoked last year on, all right, you see this day. Let's get rid of that, right? This is, all right, let me give context, right? We go on a sick run from October to April last year. Semiconductors are ripping, market's bottomed, NVIDIA is a market leader. And then, you know, we're giving signals of distribution. But at this point, we don't know if right now, right, if this is going to be, you know, another flag to buy that just reignites the trend, or if it's a trend ender. But what my lesson was on this day was my day to start doing nothing. That was the same. This bar to me is the same bar that we just had Friday, right? A range move. I didn't even realize that. Range move, resistance to support, right? So in my theory, you should be looking to sell the next pop, right? And then that's what happened. So, but listen, here's what I'm telling you, that they still make charts look nice, is this day murdered me. I went from zero. So I'm sitting in cash. So I'm like, all right, we got the warning signs. And now this day I go 0% long, 200% long. And I'll tell you why. It's because this is what they did to semis right before they lost it. Look at this chart. This is an A+ chart. This is a thing of beauty. So I see this and I'm like, let's go, right? This is time. It's, you know, trend's not done. I make a big announcement to my boys. I'm like, yo, semi's about to break out. I'm loading up all day. And I go on a huge market run here. All right. I make 33% in 2 months. And I'm trading really well. And then this happens, right? Because this is the bar that should have clued me out, right? Boom. And I get smoked. I get so smoked. I lose 12% in these like 5 days. And it's like this day happens and I'm like, well, we're still at the bottom of the range, blah, blah, blah. You know, I'm trying to like convince myself. It's like, well, we didn't get confirmation, blah, blah, blah. But, you know, that and I just kept trading it. And I gave 12% back in this. And it's like, this is nothing. This is just, you know, this is when I should be hands off. And at that point, I was up 33% on the year. I had earned the right to chill. I did it. I did my job. So that's where I'm at right now with this market. I chill. And when I have risk on, I am going to be, going so hard. It's exhausting. I'm losing a ton of sleep. I'm checking bids and asks in the middle of the night. It's exhausting. Not everyone is like that. This is what works for me. You know, I can only do what works for me. So I go really, really hard when the market's telling me to, and then I'm just chilling right now, and I'm keeping my peace. That's it. And it feels so good. And then I watched the action today, and I was like, whoo boy, like, man, I feel like a genius when you skip out on this action. You know, this is hard trading. I was telling my boys, I was like, this is all Madden. Like, we want to be trading on rookie mode. This is all Madden trading, you know? And the thing is, like, they're still going to make this CRDL broke down so badly, right? Richard, that's a nice looking setup, right? That's a nice looking setup. And they're just trying to get you in. And then if you look, when they gap it down this day, right here, at one point in the day, it looked like this, right? That's sucking so many traders. That's amazing. AI leader, 26 estimates through the roof. This has been the stock, right? And then what do? They make it look so pretty so that you buy it and then they dump it, right? And it's a big lesson in environment over setup. People are just, You know, we've been conditioned to buy the dip for so long, and now we're seeing these tea leaves change a bit. And I'm not saying I know what happens next, or we're definitely in for a correction. I'm just saying I'm getting those same exact vibes I got in April 24 when I made that big mistake. So I'm chilling, right? I can only do what works best for me and avoid what works worst for me.
Yeah, well, folks watching this, it'll be posted this weekend, so we'll have a few more days of data.
Right,
but
then,
we'll see what happens.
Trump's going to come out. Trump's going to come out and say China war over.
Yep.
We're up 10%, and they say this guy doesn't know nothing.
Yep, we'll see. And Nvidia, bring up Nvidia as well.
Well, yeah, all right. So Nvidia had this huge BlackRock deal today.
Yep.
Strikes $40 billion AI data center deal. A month ago, this news hits. Nvidia's probably up 3%, and the market cap's up $200 billion on the $48 billion deal. Right now, they sell off. But I have a buddy who works at Goldman who told me that might be to do with the Broadcom deal, AVGO. Too smart for me. But I'm just reading the tea leaves. So that I'm just noticing a lot of these things in the market, and just. The rest of the market is not that great. Like, industrials, all this stuff. Industrials are igniting a little bit, for example. And then it's just and then, right? Like, I thought industrials were about to break out here. Nice little base, high and tight flag. And then they just sell it off. And what do they buy? They fucking buy IREN. That's the only thing they're buying is this stuff. And we'll go over this trade later, too.
What do you think about what's happened with the crypto liquidations and stuff? Is that just like crazy risk environment that got canceled out, or is that a sign of something deeper? What's going on? I don't know. It was just so extreme.
That was so extreme. That was crazy. It's so disheartening. That stuff is like that stuff makes me really upset. Is that you have these traders who open up and make these $800 million, and then you hear these stories about guys committing suicide in their car from it's just like it's really awful what's going on in that. But as far as crypto goes, I know I'm not a crypto trader. I can't stand crypto. I know that to have a position, I need to buy hundreds of thousands of dollars of stock, and crypto is just kind of nonsense. So I don't really trade speculative names. I don't trade the small caps. Like, I'll trade some small caps, but I missed quantum because if a stock has 5 million in sales and has a 5 billion market cap, it has a really high risk of an offering. So if I have a 500K position in these names, they have an offering, they're down 50%. That's a black swan event for me. I can't do that. Right. But for some reason, this is what I was kind of thinking about with myself. OKLO kind of fits that mold, but it's one of my best names that year. Maybe I outweigh the government nuclear mandates and things like that over the kind of never making any money things. But so I avoid kind of very speculative stuff. And remember, I started trading at T3. They gave me $400,000 of buying power day one. I never had to worry about size or price, or I never had to trade lesser price stocks because I never had the problem with buying power. Right. So crypto stuff is I try to do very little. As far as like leverage and stuff and crypto leverage, I don't know. That stuff is horrible. Trade stocks, guys. Jesus Christ. There's so much money to be made in stocks. It's like you got to buy like Pepe ass plug, like just buy Tesla, So, all right, where do you want to go from here?
No, perfect. Let's dive into your next trade. We'll leave that there.
All right. Pepe ass plug. Sorry about that. I've been trying not to curse the whole time. I told you. All right. So my bread and butter is earnings and earnings flags. So I guess this NBIS is more of what they call an episodic pivot on Twitter. I always call these things earnings flags or news flags. But all right, whatever. So the setup is, get a gap up, and then how I do it is I'm trying to buy off support. I'm always trying to find the tightest risk entry on support. So this is so my entry here, so I end up buying 91 versus 88, but I buy it on Fed Day, this Fed Wednesday. When's the last Wednesday? We came down to the 10 EMA. It was this day, right? So market's a bit overheated. And what I'm looking for in this Powell meeting is I'm looking for him to bend the knee to Trump. I want him to say, yes, the labor market's a concern, but inflation looks transitory. And even if, I don't necessarily think that. I think there's a lot of inflation in our system, but the market's not the economy. So I wanted to hear him say, I want to hear him bend the knee to Trump in regards to the rate cut schedule. I need to see the rate cut schedule. We have a very aggressive rate cut schedule, and the market's getting bought on that. last year I had a 6 short on this. Man, I'm jumping around too much. Sorry, man. I had a 6 short on this the SPY day, December 18th, because I thought we had such a lofty rate cut schedule going into 25, and I thought it was way too aggressive. And I had the thesis that if Powell says we're going to have a lesser rate cut schedule, I am going to get short. And how the trade triggered, it was such an amazing technical trade. So the 5 EMA and the 10 EMA, they're different now that all this stuff has happened. Yeah. Like at the time, the 5 EMA, so
it was all clustered together, right? Yeah.
They're all clustered together, right? So how I look at runs and how I look at the end of runs is like we're reacting here off, what is this? This is a 50 EMA. Now we're reacting off the 20 EMA. Now we're reacting off the 10 EMA. And then we're reacting off the 5 EMA. So it's like the more and more we float higher, that's when I'm looking for that kind of trend turn. So the exact low of day was the 5 EMA. And we had all this air down to these lower moving averages. So I just had a sell stop. And once I heard he was like, no rate cuts or less aggressive rate cut schedule, I hit that intraday short, covered it. And that's how I ended my year. I was like, all right, December 18th. I'm done, boys. Okay, so back to this. So
we're talking about MBIS. The MBIS.
You got to get me off these tangents, brother. Yeah. All right, so this day. So I want to hear that rate cut schedule is still on track. I don't want to hear him say that inflation's a big problem in the system, and we're overheated here, and we have air to the 10 EMA. So I'm looking for a stress test. So here's a thing that helps so much: being ready and being prepared for a stress test versus being a victim of a stress test. Being over-levered when the market's floating higher and then getting smoked on that down move and everything recovers intraday on the stress test, right? A stress test is like an overbought market. It pulls into support and gets bought up. So I'm prepared. So I'm going into this Fed meeting light, preparing for a stress test, and it just couldn't have been, it couldn't have happened in a better way. So again, we got that pullback to the 10 EMA. So I'm looking to buy. Right, here's the pullback to the 10 EMA, and now I have my list, my focus list I'm looking to buy, and I buy NBIS, and I'm looking for a perfect entry, and I get that perfect entry. And again, I'm hot, so I'm risking 2R, 3R on all my trades. Hard to do, easy to say, hard to do in real time. So we get that. All right. So here is the day of entry. And then these two circles are the actual physical entries. This is what I'm talking about, perfect entries only. So I know 88's my out. So what I'm looking for is 88 going to hold up. That's what I'm looking for. When this thing is diving, I'm saying, let me see buyers show up at 88, 89, 90 bucks. So, these are 15-minute candles here, right? We go through this. Let me turn the volume off because whatever, so we can see it. You go through this bar by bar. Oh, we're dead. Oh, might be alive. Oh, we're back. We're dead. And then once I see this off a higher low, but a snapback, and if you look at the volume, you see, I guess it's not huge in that moment. The tape sped up and I felt it. Mm-hmm. So I start buying 90 and then I add 91. And then this is like the technical intraday entry through these highs to me. Right. And I buy all that against 88 and I buy 2R risk. So I buy about 7K shares, and I'm just giving it to this 88, right? Now, most people trading this stock, right? They're going to be like, all right, we can, maybe we can enter through these 94.50 highs against this 88 level, right? It's like if you're looking at this chart, just kind of, that's like the technical spot you're looking to buy. I got 7,000 shares from 91. Against 88. So that's my thing, is perfect entries only. So it's like when you see this kick, I have these kicks into 110 and 114 where I take off. I end up taking off probably at least half, maybe 60%. I got to look at the exacts. But I'm covering this 5 and 6 to 1 on 2R risk. So I'm booking 6R on that trade, and I still have a normal size position for myself. So that's where, and again, remember I told you that story about the double tap? About, you double tap on the breakout, you sell that position into the pop, and then you have your position and you booked your risk, right? That's kind of, I didn't even realize that till this moment. That's kind of the thesis, the thought process in this. So I like to trim 5 EMA extensions. So not this is too soon, right? From my entry, I'm not getting 5 to 1. And then this one, even though it looks so good, this is going to be a symbol for me to take profit because I know that compression is likely to happen soon. What happens is it just keeps running. I sell everything on that Friday. But in doing so, and getting that first kickoff, now I have a full 1 hour risk, and I can chill, and I can just handle the trade normally. And I'm not emotional. I'm fine. I'm not wound up. I can just handle the trade and treat it on moving averages. Look, I sell a 5 EMA extension here, and then it tries to extend and reverses on a Friday where, you know, I'm getting out of everything on a Friday like we just had. I'm getting out of everything. I don't care. Some guys held and are like, oh, you know, Monday you hear the birdies. They're like, oh, should have held. Oh, taco. Blah, blah, blah. Yeah, good luck. So for me, my biggest strength is reading short-term price action. Mm-hmm. So I'm going to get in for that first move. I'm going to get big for that first move, and I'm going to get some off. I'm going to take profit and pay for my trade in that first move. And on that same day, I also bought some CRWV. We didn't plan on talking about this one, but I mean, while we're here, let's do it. Mm-hmm. So all right. So and then kind of how I view names is I stalk them. I stalk and stalk and stalk, and I say, let it come to me. I tell myself all the time, let it come to you, let it come to you, let it come to you. Because, all right, so I see a downtrend break, and remember, I'm a gunslinger, so I'm just dying to fuck trying to F myself up with risk. So I know that CRWV is trying to break a huge downtrend, all right? This name, when it has this gap up day on this highest volume ever, right? I determine I'm going to trade this name soon. This becomes focus list. When I see this high volume move up to, at this point, it's like, oh mama, right? The volume's the cue. That's the key to this trade. I don't even know what the news was. It's so hard to keep up with all these circular deals. It's a full-time job in itself. But I don't want to chase. I need big size, and I need some sort of entry tactic that I love. So one of my buddies buys it this day. Shouts out to Tommy. He buys 114 against 100. That's talk about a perfect entry. But that's not me. That's not me. I'm not that confident. I need more. Confirmation before that. So then we have the Fed day coming up, and this is on my focus list. This is absolutely on my focus list, and I'm just waiting, letting it come to me. And then this is Fed day right here. All right. This is Fed day, Wednesday, September. Yep. All right. So again, very similar to MBIS. And you know my thesis on that day from talking about the Fed. I want to see that stress test. I'm prepared for the stress test. I want to add risk after I see buying off that 10 EMA or a little market dip or something. So, and now CRWV, I know it's got this little mini flag. It's forming here. So I see this down move and it's like, okay, buyers supporting 116. Okay. Now they're trying, and then it has this, and it doesn't make a lower low. It makes a higher low and then rips up. And then this is kind of my technical area. And I buy 119 just against these lows, 114.50. So how I traded it, and I'm buying. I bought big for this one too. And these names are hard to hold size because their daily ranges are so crazy. But again, I'm trying to train myself to be able to do it. I have an active thought of oversizing and trying to shut down P&L and trying to get bigger and better every year. So this is the day I buy it right here. I just have a stop at lows. It's 114.50. How I kind of manage the trade, it has this. So my price is 119. My stop 114.50, 450 nominal risk. So I got to make 22.50 to get 5-to-1 risk reward. What you do, you got to take 450, divide it by 2, move the 0. That's a quick little math tip for you. It's all a simple game of math we're playing here, Richard. So I got 450 risk. I got to make $22. So let's see it. Let's see if I did it. Because I don't even remember. So I buy 119, 114, and then I get stopped out of a chunk here. Boom. This intraday is selling. So, all right. So I see this, and I'm holding my full position. And this name just went 119 to 136. So remember, I'm trading heavy, and it's like my P&L is flying up and down. I just got to remember to shut that down. And I'm like, all right. So I'm looking at it daily, and I didn't want to kick this stock. So I'm like, man, this is such good stock. This is such good stock. And it was this day, right? Because it just ignited this day. And remember, my price is 119.50, and now it has the ignition day, and now my stop is 119.50. So now I got a break even trade on my hand. But I end up cutting 2/3 because I know how the name trades. And man, I'm so happy I did when it made this flush. I'm like, oh God, guys, it got this little, like, you know, kind of, it's got this level and this name loves to flush. So I cut 2/3. And let's see, 131. So I made $12 on 450 risk. So just under 3-1. Not that great. But again, if I'm double sizing, that's 6R I'm booking or whatever. But I only kicked 2/3. So I booked 4R. But I have a third position left, but again, double size. So it's like a 2/3 regular position, only because I have so much traction going into this moment. And I have so many winners lately is that I'm able to trade bigger. So I take it off there, and then it ends up being a failed trade for me. But I wasn't even talking about that one. So how do I get out? So this day, I downsize heavily. It's just like, all right, I want to buy heavy against the 20 EMA. It gives me that test. And then it has news, and I don't get a chance to buy it back, and I just haven't traded it since. All right, so that was
go back to
CoreWeave, which we didn't plan on going over. So it's like, what are we doing out here?
We got here from MBIS, and I have one more question on MBIS. I know it's more of an art, but could you try to define for people what a 5 EMA extension looks like for you? What you're looking for? Yeah, that'd be awesome.
Right. So how I look at moving averages is I look at the 5 EMA as kind of equilibrium. Meaning it's always going to be back there eventually. It's going to be back there soon come. How long it wants to stay away, that's for someone else to determine. But if we look, moving averages are all a symbol of compression and expansion, supply and demand, right? And I want to be involved for these pressure cooker situations. So like, for example, what sucks is MBIS was big on my watch list here. I wanted to buy at 68, could have used that one. But for example, so I know the 5 EMA catches up. Right? And the 5 EMA it's good for short-term support, but it's not going to hold over the long term. The only way you could trail on the 5 EMA is situations like RGTI, where it just like keeps going and going and going. That's the only way you can really trail on a 5 EMA. So if I'm trading off a 5 EMA, I know that I have to get stock off soon, right? So I'm buying this off a 5 EMA. But in knowing that, I know that I have to get a kick into the first pop because it's got to consolidate or start moving sideways at some point, and I want to pay for my trade before it gets to that point so I can just manage risk more easily. So a 5 EMA extension, not yet, because, you know, it just kind of broke out these highs, has this little day, and now it's, again, 1, 2, 3, 4 days up. It's not like this is where I can be at fault. You know, this is where my system has a little bit of holes, calling this an extension. It's not like a huge extension. It's not like a real extension. But for me, I know this thing is most likely, or I don't know anything. I know most likely that it's going to have to consolidate soon. And I have an oversized position where I can pay for the trade now and get my risk off, you know, or maybe, you know, this breaks the 5 EMA tomorrow to the downside. It's got to consolidate. And now I'm just kind of, you know, regretful. It didn't, but that's how I look at a 5 EMA extension. And we'll go over IREN, and I'll show you where it trips me up, because it does trip me up sometimes. And I kind of overanalyze that 5 EMA extension. That's something I'm definitely working on.
Yeah,
let's
go
time
through that
frame.
one. Yeah,
that's it. What? Yep.
Yeah.
IREN.
Yeah, let's do it.
All right. Yeah. Okay. So this is again, bread and butter. Earnings gap ups, buying off support, perfect entries. IREN, right? It's gapping up. This is a big IPO base too. And here's something you can take it home. When a name makes a cup and it doesn't make a handle, see you later. That is unreal strength. You should get prepared for a parabolic move. Okay? So so I'm buying this, and it's like in a perfect world at this point, right? It gives like this crazy base handle, and, you know, everyone can load up risk. But because it's such a hot name, hot sector, and the estimates, 2026 estimates are what they are. I don't know them off the top of my head, but they're monstrous. So, all right. So the name gaps up on earnings right here. Surprise, 268%. I don't use the TradingView earnings because they're like, you know, they're kind of shoddy sometimes. But what I'm looking for is I'm looking for the 10 EMA to catch up, and then I'm looking to buy off the 10 EMA. And this is like my best entry tactic. And if you get something out of me, this is the thing to get out of me, right? So it gives a nice earnings day, kind of consolidates, lets these days catch up. So I get in this day, but look at this goddamn entry, Richard. Look at this goddamn entry. And I execute this at a baby appointment. When I'm telling you this stuff is mechanical, I'm telling you it. Listen, where's the entry? I'm buying blocks. My little girl had to wear a helmet. She had a little flathead situation. We're taking pictures of her. It's so funny. I'm like, oh, yo, guys, just bought 10,000 shares of IREN. So listen, name, right? I want to buy through this. I want to see this. We're on the intraday chart, and I don't use all these moving averages intraday, but I don't feel like adjusting them for everything. So we're just gonna leave them here for now. This down move is a 10 EMA tap on the daily. So once I see that, it's just buy stop through high of day. It's just mechanical. That's it. It's it. I don't have to think about it. If it gets me in, it's perfect. If it doesn't, I don't care. Gets me in. Doesn't even close that well. I just hold it all. And then it has the next day catalyst. But here's the difference about me and everyone else taking this trade. It had some sort of catalyst where, you know, if you trade it perfectly the next day, you can get some stock at 27. But I don't want to be buying that. I want to front run. I want to get the tightest entry off of support so I can have size for it, right? Look at this entry. God, I'm so proud of this one. From the baby appointment. Are you kidding me? My girl's wearing a helmet. I'm like, God damn, look at this IREN. All right. So this thing just starts going, and I'm just, so now I have my size, my price is 26.50 and my stop is 25.30. So I've got $1.20 of nominal risk. I don't know anybody else who had $1.20 of nominal risk in this guy. All right. So then trade management, and it's like, this is where I get tripped up with the 5 EMA stuff is in real time. This thing is just going every day. And it's just like, God, it's this is an outlier trade. And I've had these trades before, like SMCI, and I'm just like, just hold, just don't do anything, right? Just throw away the keyboard. Just don't do anything. But then I get a little skittish, and I'm like, okay, is this a 5 EMA extension? And I take off a third here. And it's like I sell it at 42. But what you got to realize is, like you look at this trade now where it's at like $75, or it closed today at 69. It's like, man, this guy kind of sucks, right? But I'm buying 26.50 with $1.20 stop, and I'm selling 44 or 41 or whatever it is, and I'm getting 15 R profit on that trade, 15 times my risk. Remember, I bought 10,000 shares, so I kick like a third into this, and then look, these are looking like extensions. This looks just like, all right, see these candles in real time. Everything is easy in hindsight. That's what traders got to realize. Everything's the most easy in hindsight. And now I'm going to go on a little tangent here again. Look at this. See how it starts skipping, and the volume here is the highest on these days. So again, I take a big trim because it looks just like MSTR looked to me at the end of its run last year. Was that the top? It's right. So in real time, you see how it just starts skipping from away from the 5, and then the volume's high. They look identical to me. But again, maybe that's over management on my part. But that's how MSTR topped. And that's why 5 EMA extensions are kind of what led me to, we're in IREN. What led me to that. So I'm trimming on that, and I take a lot off this day too. And then Friday happens, and I just get out at 62. And then that final sell is for 30R. Which is just insane to me because that's an outlier trade to me. You don't have a lot of trades like this. It's such an insane, from $1.20 risk at 26.50 to sell it at 62 with really no hiccups on the way. The only reasons I sold were emotional mistakes on my part. But again, this goes all back to the idea of if we're in a choppier market, I'm a little quicker to kick. I'm going to do a lot better than the next guy. Right. And that's what I know about myself and my system. I'm not going to be able to hold, the whole thing for the whole move. Let's go somewhere else. Where are we going, brother?
I think, did you want to talk about snow? I think that was... I
have a whole list here I'll go through. Should I just... All right, I'll start rolling.
Yeah, let's do it.
All right, snow. All right, time frame continuity is a huge part of my system. So I was talking about at the beginning, Stan Weinstein. The GOAT, the God. I can't believe I'm doing an interview right now where it trips me out. I read that book 12 years ago. It changed my life. So stage analysis. So I'm huge on stage 1 bases and stage 2 breakouts. And what I do is a little thing. If something's in a stage 2 breakout, I want to buy every flag in that. That's something I've never really seen before. That while I'm here, I want to buy every flag within a stage 2 breakout if I'm not in it already or whatever. So time frame continuity is all about this stock. It's clearly, you look at a weekly chart, it's just like a sick base. And what makes this base so sick is similar to TEM. Remember I talked about TEM powering up? It makes this run here. All right, this is the start of the base, sells off, makes a run here, no consolidation, no powering up. Comes back. You know what this news was? This gangster CEO, he says, no, numbers aren't going to look good in the future. I'm retiring. Stock gets dumped. I'm like, what a legend.
I don't remember that at all. That's hilarious.
It wasn't that bad, but like the gist of it was like, yo, shit ain't looking good. See again, cursing. Stuff ain't looking good in the future. I'm out of here. And he's sailing off on his white horse. But here's the difference in this chart compared to the other ones is the powering up, right? Look at this consolidation on the weekly. One, it gives us this move, right? Range move, huge volume. So I gotta look for, it's not like the same kind of aspect where I'm looking to buy the first pullback, but I know I want to buy this name when it comes out of the consolidation.
Right.
So again, weekly chart. It all starts with weekly chart. All starts with the weekly chart. We go to a daily chart, and at this point, it's got this little daily flag in front of it, right? We zoom into a daily chart, has this game-changing news on earnings. Street's caught off guard. Look at the gap up. News must be good. I'm not that smart. The Wall Street told me the news is good on this gap up. So I listen to price above all else. And it gives us this consolidation on the daily chart, and then it gives us a entry on the 30-minute chart. But also further, we saw MDB come back from the dead before this. So we're seeing this sector, and then we saw crowd come back from the dead, whatever this was this day. So the sector, so the sector looked like it was going to reignite. And this software sector, the whole time in this, AI is ripping. They're saying that software is left for dead and it's going to be engulfed by AI. So these names are left for dead. So they get a positive catalyst that puts them back in play. So they're back on my radar. So again, we got the weekly chart, the daily chart, and we understand there's a 30-minute flag. So I'm just tracking. And I'm just waiting. And at this point, I don't have any down here, but it's like, oh, this is getting close to me. This is getting close, but it gaps up, and I'm like, I can't buy against this 218. So it doesn't really give me the entry. So then it has this day, and I'm like, oh, we might be in business, boys. This hammer on the 20 EMA, that little hammer. So in my mind, I'm preparing to buy 227.50 against 221.50 the next day, $6 of nominal risk. And that, like, I go into the game plan the night before, and now while we're here, I'll just go off on my little tangents. I was talking to my buddy Clement, who's in the USIC this year. He'll be on here next year. He's my buddy. He's awesome. He's only 28. He's going to be such a legend when he grows, when he's in his 30s and stuff. But I'm talking to him, and he's like, dude, like, I'm up 70, 80% this year. I am trying to consistently grow my account and achieve super performance. Like, how the hell do I buy all this stock that I need to do? And what you literally have to do is you got to sit here and make the game plan the night before and tell yourself how much shares you're going to have to buy. Because at this point, when you have a few years and you get into the millions, it's like, I got to buy a lot of stock. It's intimidating. But what I do is I literally write down scenarios the night before of, if this happens and this happens, I'm $4 a risk. I need to buy this amount of stock. And so that when I'm in the game, when I'm in the moment, it's just mechanical. I got to be mechanical in the moment, right? The work is done before and after hours. So, and then here's another way I love to enter stocks is what happened the next day. It opens up with a gap down. It opens up. It opens up and it just banks off the 20 EMA. Yep. I love buying off the 20 EMA like that. It's such a nice setup. So I'm buying this day, and I just go full. I buy full position, 226 versus 222, and I buy 3R. And, because I know it's a huge macro weekly chart trade, and I know myself and that it's going to be a very emotional and difficult hold. So if I want to make some decent money on a pop, I got to risk big. But if I want to be in this for the move to 300, I got to be able to hold a decent amount of stock. So I'm trying to buy bigger. And again, because I'm hot, because I have so much traction, I'm taking more risk. I'm taking more risk in these times. So I buy, what do I buy? I buy 7,000 here, 226, 222. And I said, I'm only going to talk about size on that first one. Look at me. I'm such a sellout. And I start talking about it in every trade. So I get my tangents. I get my time frame continuity and I buy it off the 15-minute chart here because I know there's a flag. It gives me that ultimate low on the 20 EMA. And and now I'm looking for, this is my whole edge. This is my whole system in a trade. I'm looking for weekly chart triggers that I can enter on a 30-minute time frame. So now you can see this in real time. So this day happens and I get my little pop and I don't sell any. And I'm like, all right, we're rolling. I'm up big in the name. And I'm like, if I can get another pop on day 3, I can trim into this. I can get down to comfortable size and, you know, manage the trade better and pay for the trade or whatever. So it gives us this disaster day Friday. And I in real time, I say to myself, am I going to be able to hold 3R all the way back? Or do I need to just size down to a regular 1R position so I can manage this thing? And that's what I do. I sell 2R, so I sell 2/3 of my position. I sell 4,000, 5,000 shares, whatever it was. See that? I'm selling out again. But I sell it on this day, and in the moment, I'm frustrated. Like I'm like, God, I wanted this trade, and I want to be in for the run to 300. And then it opens up Monday, and it opens up, and what am I feeling? I'm like, God damn it, just obey the trail. Just obey the trail. And then this happens, and suddenly I don't feel so bad, right? This next day. But it banks off this 10 EMA, and it turns this previous resistance into new support. So I hold it. And then, honestly, I just sell it Friday on the Friday of the news. And I'm always going to sell everything on that Friday. It looks okay to me now. I should technically still be in. I don't care. Once I see a trend ender or something like a disaster day like that on Friday, I'm just getting out of everything. So I end up selling it like 248 or so for my 226 versus 222. I sell 248. What is that? $26 on $4 risk. So I almost achieved my 5-to-1 there. Oh no, that's 6.5 to 1. So there you go. So 6.5 to 1 on that. But all right, let's keep it rolling here. I got so many trades.
We got charts to go, man.
It's gonna be. This is a 5 hour. I hope you're not busy.
I'm ready, man. Let's do it.
I got nowhere to go. This is 13 years it took me to get here.
Yeah, it's good. On this trade, so the prior night before, I loved how you talked about breaking down if this, then that. This is how many shares I'm getting. In the moment, is your stop 222 the night before, or is it the new low of the day as it's pushing up? Like that low of the day as it's going?
I tier it.
Okay.
I tier it, and I tell you why. I tier the stops. I usually do half and half because I like to buy off that low.
Yep.
But when there's a low that's that close, what I clicked there? I clicked some other bullshit. When there's a low that close, you just give it to this low, and I'll tell you why. I'll tell you the biggest mistake in my trading career. Okay, here it is. One of the biggest mistakes in my career. Oh my goodness, this is such. Whoo boy, this is some awful trading. Okay. A-Lab looks amazing, right? Looks amazing. It's breaking out. This is the hot name. Semis are so hot. It has this little tight consolidation, right?
Yep.
And I max out. I buy as much as I can. I get stopped. How the hell do I get? I take a loss on this day. I lose like a full 1R loss. Horrible trading. And it was because it took out the prior days, the inside days low by like 20 cents, right? And then it goes on this epic $100 run. And it's like, the entry, my price is like, 104, 105 or whatever, name runs to 147. I got stopped out because I didn't keep my stop 20 cents. Like, I got trailed out by 20. So that was the lesson that caused me to change that one. So as far as stops go, if it's ever close to a prior, just give it to that little bit, So I did 222 and 221.49. But like after in real time, now that I'm talking, I should have just given it all to 221.49. But that gave me an extra 1,000 shares. So who's to say, right? Who's to say?
Right. Cool.
All right, let's keep rolling.
Yeah, let's do it. What's next?
Okay, what's next? I was going to talk some GILD, but I already talked about the buying the range.
Just step back yesterday. Step back for just a second. For 2024, what were the biggest trades that moved the needle the most in your account? Was it a handful of one? You've probably already gone over a bunch of them, but what were the ones that made the biggest impact?
The biggest impact for me was this SMCI. I caught this one, but again, I was selling out. This went for like a 10 to 1 stock price. This is before I really understood the 5 EMA trail and how powerful it was. And I pretty much took my position off here. And like, this was such a devastating lesson to learn. I bought heavy.
Opening
this
range,
was
yeah.
360 at the time, right? The opening range. But also this was my best trade last year was this. So I'm also a big believer in the beach ball, right? Is that a Min or Vinny term? So a beach ball,
underwater,
right?
yeah. I think it's rope ball. I'm not sure. I'm not sure. Oh, you want me to explain it?
Well, you can. I've been talking this whole time.
No, you're good. I mean, just as relative strength, look for stuff that's acting better than market, because when the pressure comes off, like a beach ball, the best stocks that have been holding up the best are going to jump up. Yep, out of the water. Yep, perfect.
I gave you a little.
There you go, the gestures. Yeah.
All right, so January 4th, January 5th, 24. This was January 4th, 25th, 2024. All right, here we go. All right, so market goes on a big run, and it looks like, right, you're coming off a big run, and it looks like we're below the 20 EMA. That's typically a sell signal for me. You know, it's looking like we're about to break down in an aggressive way. Right?
Yep.
We can all agree that. All right, go to SMCI on those days. What was that? September 3rd and 4th. You look at this thing. January 3rd and 4th. This is what it did that January 4th day, and this is where I bought it originally. So I bought through these intraday highs on this EMA recapture right here against these lows. So I had capital built up in SMCI, and I'm trimming into this resistance. And then with the understanding that, oh no, they surprised on those earnings. God, that was so sick. Oh God. So I'm trimming into the strength as I do, and I eventually get out of the trade. I think it was like this day I get out of the trade, and then they announce earnings early. And because I have capital built up, I can go 2R risk in this, and then it gives me that God level move, and that's how I make 33% those first 2 months to start. So that was like the big needle mover, and then this crisp later in the year. Let me see this. Oh, I guess this was January, February too. This was an awesome trade because I was snowboarding with my buddy Dorian. Shout out Dorian. I'm executing this from the mountain. I'm kind of shit faced. So, all right, let's look at this crisp. Compression expansion. This is my whole system is compression expansion. Buyers, sellers, someone winning the battle, right? So crisp here in the SIC consolidation, genomics, biotechs were a little bit hot at the time. They weren't anything special, but this is an A+ setup for me. This consolidation in a name like crisp that moves so much. Mother of God. So and entry tactics, right? So zooming in, this is my entry right here. So I'm buying. What are these highs? So I buy 65 versus 62. And then how it sets up. All right. So how it sets up is it gives us this breakout day and then gives us this kind of maybe an oops reversal, just kind of, I don't know, whatever you want to call that, retest of the 20. And so I buy, I'm micro trading this thing. I can't get to a 65 minute there. I get up to 16,000 shares of this thing. I am like tripping. Like this is so 15,000 shares of TEM this year versus 16,000 shares. I wasn't ready for this size versus I was ready for, even if TEM drove me nuts, it's like I've grown so much in that year and I've figured out so much stuff about myself and my strategy in that time but 16,000 shares of this. So I'm on the mountain. I'm up 80 grand. I'm kind of wrecked. And I'm just like, so I'm just trimming out of this thing and I sell 12,000 shares on this day. And my buddy Dorian's in the trade. And when it does like this, and I'm pretty much out of the trade at this point, and it does this move, and he looks at me on the mountain. He goes, man, it's like, sorry, brother. And I'm looking at him. I go, brother, I can't see straight. I just made $80,000 from the mountain. Let's just make it to the bottom, right? And and that was the trade. And then I held a small piece that eventually got stopped out on, but it was like nothing to move the needle. But it was the 16,000 shares that I had from 66, whatever it was, to 75 that really moved the needle for me at the time. Those are the two big trades I remember. I trade so much and I have so much going on, and I talk to 20 million traders every day. Like I don't, let's go. Here's the last trade in Chris, but I don't remember, you know, the tick by tick stuff. You know, it's just, I just have so much going on. All right. So where are we going from here, brother? You want to go some theme trades? We'll go some OKLO, LEU?
Yeah, let's do it. And maybe talk about like, there was a question a lot of people had when we also on Twitter, like, how do you identify the themes that are setting up? How do you look to see, you know, where the puck is going, you know, in real time?
Well, now we literally have it so easy. It's like you gave it to me. The theme tracker is like, that's what I'm talking about. It's just so easy nowadays to obtain information. The research I used to have to do versus the research I do now, like time spent, is insane. It's not like I'm putting in less work. It's just more effective work. So theme tracker, deep view, you know, that thing is amazing. I'm hoping maybe they can get me in the platform after I give them an interview.
Yep.
But it's just studying the biggest gainers and going to Finviz and screening, like Finviz stock screener. I'm going for the top gainers that week. Technical performance, you know, week up 10%, and what's that get me? And then you start finding the names in the same theme,
right?
And you literally see the theme emerging and the sector strength. And also, I like to go to I do a lot of work in these sectors. I have all the sectors here, and this is the kind of thing. It's like, okay, biotech strong, semis top. Damn, is that a momentum flag in semis? Oh, Yo, Richard, are they doing the same thing they did to me in 2024?
They're pulling you in. They're pulling you in.
You see how they just tried to rope me in? Oh my God. Oh my God. I'm not doing anything tomorrow. But so I have a deep study of sectors and just following the theme strength and the biggest gainers in the market. And that's really it. Just following the biggest gainers. And then once you start to realize the same charts, they all start to look the same. They all trade together.
Right.
There's a famous Stevie Cohen quote where he says, a stock is 40% the market, 30% the sector, and 30% itself. So there's a reason all these quantum names, you could pick one and they're all looking like, maybe not this one, but it's like, you know, QUBT, cup and handle, IONQ, it's like cup and handle,
yep.
RGTI, right? Just a nice consolidation breakout, but you know, whatever. But they all start to look the same, and that's how you kind of track it. So for these uranium trades I'm about to go over, I couldn't believe that the URA was still looking this good. Mm-hmm. Like, you know, after this sort of run, I'm buying OKLO and LEU in these trades I'll go over about. I'm just like the charts are dragging me in. I'm like, there's no way these names keep going, but it's like the chart is pulling me in, and I have to trade it because it's the hottest theme. And this. Like, look at this huge run up, consolidation. And now this little area, you know what that is, Richard? It's powering up. It's powering up. And then what's it do? It fucking, you know, Christ. So I recognize that and then I see in LEU, right? It's got this
yep.
kind of consolidation, mini cup and handle. And I'm going to call this time frame continuity. It's got this cup and handle on the daily. It's got this hourly. It's like, look at this cup and handle, and then look at this consolidation and it's just like such a beautiful thing. And then you look on the weekly chart. I use 10 and 30 on the weekly because Stan Weinstein told me to, all right? So then you look at the weekly chart on LEU at this juncture. And it's an inside week on the 10 EMA. So for me, that's buyers meeting sellers. That's compression before expansion. Right? Those are, and it's an inflection point. These are all the things. It's dragging me into the trade. So I have to buy this one. So it sets up. Let me get my moving averages back here. Let me get 200 out of there because it's just squishing the charts at this point. So it gives me the setup. And again, this is one. So you see what it does. All right. It has this consolidation, and then zoom into this little day, right? I'm trying to get you to see what I see so much. What's it do? What did Snow do? Bro, what did it do? It opened up, it banked off the 20 EMA, and then it ripped up, right? I love that, man. It's such a sick setup. So I buy this one, 208.25, and I have my stop below 202. Low of day is 202.44. 20 EMA is 202. I need to see it close above there. So that low of day is fine. I'd like to give it, in other trades that I'm buying through previous day highs, maybe I'm giving it to the prior day's high. But again, for this situation, because I see the bounce off the 20 EMA, that's what's getting me into the trade. So then, I start selling. I sell some 4-to-1, 5-to-1, and it's like, man, this thing just keeps going on me. And like, this is, right? We look at, all right, this is what's tough, right? Look at this closing price. Now I'm like, I took some off for 4 times my risk and 238. Look at me, I'm so great. But again, I had $6 of risk. I'm buying 208 against 202. God, so in my final form, when I'm my best trader, I still have a ton of LEU. That's right. What I'm working towards.
It's tough. It's tough because I was talking with Christian Flanders about this. Like, there's market periods like this where things just keep going, and then there's a 2021, 2022 where it's pop and drop, and it's hard. People, like you said, people have short attention spans. They're going to try to change their rules to always hold, and then the next season of trading is going to be a pop and drop market, and you're getting it ripped to pieces. So go ahead.
I literally saw him post on Twitter today. He was like, it's like got me upset, like these things like get me upset, but I don't get emotional on Twitter. But he's like, or I think it was Jeff's son posted. He's like, do you take profit into strength? And then Christian's answer was like, no, your expected value is so much less on a trade. Which, yes, absolutely. But traders have such short memories. Like, do you remember what 2022 was like? It was a brutal year. It was so brutal. But me, I was able to do pretty well because I'm taking those just tiny 3-to-1 risk reward trades. So it's like, I'm going to trade every market. So right now I have to take these kind of kicks off and maybe you interview me in 5 years and I change my system. So I'm a little better with, managing these things. But again, I'm trimming here, and now this one only here is like a 10 or 15% trim. This is a 20% trim, and now I'm down to 2/3 of my stock into strength, and then it's like the 5 EMA extension inside day, and to make this like it's not like this is the only name I'm trading. I have 10, 11, 12 names going on,
right. So
it's like, all right, this is extending from the 5 EMA. It gives me an inside day. And it goes inside day and down. I get out of my full position there, 295. So let's review the trade. I'm in at 208. My stop is 202. I'm out 295. I make $87 on $6 risk. So it's almost 15-to-1, 14.5-to-1. So great trade, right?
Yeah.
It's up 50-to-1 right now. So that's like, But again,
it's the hardest balance
for me.
Yeah.
It's the hardest balance.
Yeah.
It's the hardest balance. And for me, I need to take some off into that strength. But like where my account would be, right, just like that crisp trade. It's like, where my account would be if I was able to hold all that size. So I get obsessed with size, but then I get out of the last chunk too early. So I'm really trying to train myself to just hold that last half until, it really, really breaks the rules. But again, this is not a normal market. This is an outlier market. Right. Let's talk about OKLO now. Okay. This is a funny one to me because, all right, OKLO. I love buying off 10-week support. Mm-hmm. I love buying off 10-week support. So this is when I eventually get into OKLO. So let me look at a daily chart here. All right. So OKLO, has this kind of cup and handle breakout.
It's like a handle on a handle. Yeah, go ahead.
Yeah, right. It's a handle of a handle. And then it's just kind of consolidating, but it falls out of favor and it's not really doing anything. And if you remember, it's not on people's radars at this point. Like, people kind of forgot about this. And this just gave me such a great lesson in just like keeping that theme in your mind, and just waiting for that perfect end. It's crazy how it worked out versus the day one of this trade. So let's zoom into this OKLO, right? So here's the setup. So I use the 50 EMA now because it's most closely the 10 EMA on the weekly. I love buying off so I cut out the 50 SMA and now I got the 50 EMA because it's most closely the 10 EMA on the weekly. So when I see a test, I know the 10 weeks getting tested. So it gives us this test, which to me is kind of a stress test, and then goes inside day. Look at all the moving averages though.
Yep.
Look at this compression. Look at that. That's a thing of beauty. So now it's giving me an entry, $72 and I'm going to be against 69.61 is the low. I'm going to give it to below the half because liquidity sits at halves and whole numbers. So example, if my stop is 67 exactly, I'm going to have 66.89 because I see a lot of shakeouts to the 90s, whatever. You'd be surprised how much it works. Just that extra 11 cents, whatever. Back to the setup. So I get in this day. I get in 72 against, right? The entry's sick. The entry's always going to be sick. It's the exit. That's garbage. All right. But here's the thing. And this is why I'm telling you, your emotions in the moment lie to you. This is the stuff I like to track on my journal that I feel is your emotions in real time are not usually a good thing. They're usually working against you because they're kind of reducing to your normal basic human monolith kind of instincts, right? It's like, I just want to protect myself and survive, right? But we got to have rules that, again, keep us in trades for the long term, which is stuff I work on, but whatever. So I buy this 72 on the trigger. Again, just this one's just a simple buy stop against, I feel the area is, it flashes down to 69.55. So I get that kind of low of day stop. I buy 72. But if you look, this is day one of entry.
Yep.
You know, it's hilarious to be talking about a few cents in OKLO now because look where it closed, 175. Oh my God. So I enter here and I'm like, God, and this is when I have a lot of trades going on. What was this? September 9th. This might've been the day I entered IREN. No, that was the 14th we talked about. But again, I'm trading really, really heavy at this point. I think maybe Baidu, we'll talk about China in a bit. So I have this and like, I am just dying to cut this one break even, but I'm telling you, stick to the rules, stick to the rules. You found that entry, you found that entry. So I do stick to the rules. But here's where I take my first trim. Again, now that you're seeing this 15-minute in real time, it makes a lot more sense about how I handled it. And now I get this 80 trim, and this is 72, 69.50, 250 in risk. I'm kicking 80. That's what, $8, 3-to-1 risk reward. I actually take a third of my position off. Look where this thing closed. And I sold a third of my position at $80. You know how much that hurts? Whoo, boy. But again, we learn every day here, Richard. We learn every single day. So then I get that kick off, and then I'm kicking, now I'm just like, but now I'm looking at this chart here and I'm like, oh shit, like, oh, this might blow. And I already kicked like, a third of my stock, but it gives me a couple. Now this range, this is a $12 range. Look at this range. I bought this after a day, it went $2. So this is a 5 EMA extension. It is. All right. So I take a little trim. I end up trimming, I think like 10% on this. And then what's it do? It flags out for 2 days. I'm like, God, this thing is still so healthy. Like, why do I not have my full position? What's it do from here? 5 EMA extension. And now I'm just like, oh God. But I'm selling now at 106, in 1, 2, 3, 4, 5, 6, 7, 8 days, insane. I don't even know what the risk reward is on that. And then that's what happens the next day. And this is like, I know nothing about trading, Richard. I don't know I don't know why you're interviewing me. So I take a big trim on this 103 day, and then it makes this explosive move, and I'm just like, all right, I trim down to like a 10% position, and I'm just like, it's one of the, it's like I'm making so much money, and it's so painful because of what I should have done, right? It keeps going, and then it has that kind of, this is when I got out of LEU too, same day, where 5 EMA extension inside day, and it's like, at this juncture though, it's like, is my stop 30% lower at the 20 EMA?
Right.
Like, what are you to do in these scenarios? So everyone talks about the hindsight of like, oh, you got to hold because you're expected, blah, 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 blah. But it's like, if I'm holding 10, 12 positions, risk the F on, how can I, do that? But, and the easy answer is right, is trade less, focus more on names. But again, these are outlier moves in this market. These are just outlier moves. And in a worse market, I'm going to do better. Not to say I'm doing bad, clearly not doing bad, but it's like what I could have made and what I did make in this one. And then it gave another setup that I was calling out, but I didn't buy this one. I was distracted by like CRWV and all that other stuff. So that was the end of the OKLO trade. But what I want people to understand is like, I did have the perfect entry on the EMA-reclaim. We could definitely agree on that. I was like 30 cents of being stopped out. So my emotional state in that trade is so funny to look back on now that it became this. And I'm 25 cents from being stopped out on day one. And I'm like, this thing sucks. You know, it's so funny. It's just, I don't know. It's just funny to me. That's,
Yeah.
So, all right, that's OKLO LEU.
You mentioned Baidu. Do you want to jump to that one?
Let me do, all right, so we're talking about a bunch about, well, I'll talk about Baidu in a sec.
Yeah.
I'll go to stage 2 stuff. But let me talk about MP first.
Let's do it.
This is theme trading, buying off the 10-week. Theme trading, buying off the 10-week. And this is also a Friday swing.
Nice.
Friday swings are dope. Like, they're so sick. And it's only because I've worked 13 years that I'm telling you this to get to this interview. You know, I want to keep this stuff to myself. Trust me. So this MP is a hot name. I don't catch this move or this move, but it's on my radar. I'm waiting for a pullback to the 10-week. I think I buy here. I do have a trade here that I end up just kind of giving back. Whatever, that's a nothing trade. But again, this is August. I'm not hot. It's a regular risk. I'm not, you know, I don't have that same mentality that I had in September. So again, let's look at the weekly chart. And a huge layer of probability that I don't think people talk about enough is support to resistance flips. This is one of the biggest things in my system. It's literally a signal of buyers stepping up, and I'll tell you why. Roadblocks. Never forget roadblocks. I tell anyone I come in contact with, never forget roadblocks. All right. So everyone and their mother is focused on this stage 2 breakout last year, 2024 roadblocks. And now look at this setup, right? We got this huge base, and now we get it powering up. So I catch this move, and it's a sick move, right? This move. We run 48, 76. Great trade. Wow, I'm a great trader. Stage 2 breakout. All right? Falls back, and I'm just not staring at the name, you know? I don't care about the name at this point. It's just off my radar. The real move happens. It goes 50 to 140, and now people are talking about Roblox cup and handle on the weekly when the retest entry was the whole entry the whole time. So it's like when things retest, don't lose track of them. So MP, when things retest, don't lose track of them. So let's look at the layers of probability in the situation. You got MP with its huge estimates. You got Trump on the team, right? Government intervention, whatever. They're buying companies now, whatever. Whatever your feelings on that, that's great, sure. But they're not going to lose. They're not going to lose. So now we get the hot thematic trade in the rare earth. We get the retest. And now on Friday, at this point, look at that chart. Look at that weekly chart. Do you think Twitter traders are going to say, holy shit, God damn it, holy S, this looks amazing over the weekend on Twitter? You think people are going to go nuts over that? Yes, and of course they did, and this is what happened. So this is where I bought it. So you see this inside day, right? I just bought this inside day at the end of the day, and I'm just giving it here. So I buy, what's this close at? It closes 63.50. So I buy around there. My stop is these lows, 61.39. So I buy, what I buy? Close 63.50, 61.39. So $1.80 in risk. I gotta make $9, right? So 63.50. I got at 72.50 is where I'm looking to take profit. So I buy this one, and now what I want you to focus on with me is the entries, is because like that's an edge. This is real edge we're talking here. So now it becomes the hottest trade on Twitter. Everyone over the weekend. And this isn't an easy buy. Friday at 355, just like nothing's going on. But again, this is all about the weekly chart. So I'm using a very small time frame. I'm using an intraday chart or an inside day chart to get in a chart that affects the weekly chart. So, and then that's exactly how I handled it. And, you know, and what happens there. And then I got the move I was looking for. I missed the breakout. We'll talk about that. So here's how I traded it was I sell some. What's the high this day? Is 70? No, it only got 72.15. So I sold some 74, and that was like 5-6 to 1 risk reward. And it's kind of floating around here, and then it makes a new high, and it's a little bit extended from 5 EMA again, maybe 2. So I take some more off here. That's another 5 to 1 kick. Then it has this day, and I think it's going to break out. So I don't, now is when I'm trying to be patient with my stock. I'm trying to be a little better, and it fails the next day, and I'm just out of the stock. But what I want you to focus on is that entry location that I can buy 63.50, and full size 2R risk. Like it's really hard to do in real time. But then I look at how these things end after, and it's like, okay, so what I kind of realized my edge was, I'm talking to traders all day. I'm front running their beliefs and their thoughts. That's really what my edge comes down to, because I know traders. I know how traders think. I know how traders act. I know when they want to buy. I know, on gap ups when they're too excited. And, it's like I just have such deep study of traders that now I manipulate that aspect a little bit. And that was my entry for the MP. All right, we back.
K-Web.
Let's talk some China. So I'm trading China. Oh my God, China's so hard to trade because these things gap up and down so much overnight, and I'm trading them heavy. I'm trading them just as heavy as I'm trading U.S. stocks, which, in hindsight, yes, I'm glad they worked out. I was too heavy in these names, and for how much they gap. But here is the trade thesis. So here's the K-Web. It's the Chinese Internet ETF. And this is a big stage 1 base. Stage 1 analysis, stage analysis, Stan Weinstein. We look for stage 1 bases to go into stage 2 breakout phase. Then we want to buy the stocks within this sector that are setting up for the stage 2 breakout. So we got the K-Web here. So I'm hungry for China risk. I'm hungry. I was saying the road to 160. It didn't make it up there. But there's no fancy entry tactic here. This is just a recognition of, okay, China's in stage 2. And this is when our market begins to slow down a little bit. September 3rd, 4th, we ignited. Okay, so when I'm trading, I'm talking about OKLO and LEU. This is when I'm trading this stuff like crazy as well. And I have very, very heavy positions on. So all these names I told you about that I have 2R risk, 3R risk, it's all during this one time. How I handle risk is I typically risk a 0.5% every trade. So I'm not one of those guys who does 20% positions across the board, because you buy 20% of Microsoft and you buy 20% of HIMS. The names move differently. HIMS is a cheap name and it's very high beta and volatile, and TEM is in that same thing. Microsoft's a very expensive name. It's very thick. It's very low beta, and it moves a very low nominal number. So what I do is I do a 0.5% risk, but that's over the aggregate of my life. Because remember, what I want to do is when it's hot times, I want to ramp up the risk. And when it tells me to stop, it's just time to stop. It's time to chill. So my pain point is typically 5%. I can handle a 5% down day. So I typically like to max out at 10 names with 0.5% risk if I'm max risk on. But I'll bend my rules and do that to 7.5%. Which nominally, I haven't had that day where I've had 5% down days, and they're there. Whoo! Hair, growth, chest, no HIMS needed. Shouts out to the vegan hippo. He always makes that joke to me. All right, so train of thought. So I want to be more risky in these during these times, and I have all these trades going on. This isn't a fancy entry tactic. It's more of a recognition that the K-Web and the MCHI, which is the broad China ETF, is about to go stage 2 breakout. So I want China risk. I bought BABA in my long-term account, but I didn't trade it, so I don't want to talk about it. But I traded this Baidu, and this thing was just such a monster, such an absolute monster. I buy this day 96.30 just against 92, whatever this area is, holding, and it's just giving me the thing, and then it just explodes up. I take a third off into this because it's like, this is an actual 5 EMA extension. I don't care what you tell me, okay? This is an actual one. What's it do? This is why trading China is so hard, because you can't, the technicals are spaced out because it's an ADR, right? So it's just like, I am up all night. I'm rocking my baby and we're watching China. I'm like, Kai, what we doing today? So I'd kick a third there. Oh my God. And this thing just keeps going. So I hold here. I don't kick any here. That's I'm a little bit proud of. Then it gives me this next extension day, 10% there, and then it has this day. I'm virtually, so I'm out except 10% of my position, which is like a core feeler until I get stopped out. And it's like 5% there and the last 5% there, just to like trade it right and make myself feel better. But this is the real sell. Was, where did this close at? What, 135-ish? So my price 96 against 92, $4 risk. My average sell is probably 120. So what's that? $24. I'm $4 risk. There you go. 6-to-1 risk reward. So that one's, that's successful in my book. And then also, what was the other one? Baidu, and what was the other China one? Vips. Not as sexy, and I got to shout out my boy Zach here. One of my boys I trade with. So he started trading with me in 2018, and he still trades with me to this day. This guy's like one of my great friends, and now he's such an assassin with his charting. Like, he brought this trade to me, and like that's sick. Where I could train a guy up a little bit, and now he's bringing me charts, and I'm making money off him, and he's paying me. You know what I'm saying? Like, that's a little good quid pro quo. You know what I'm saying? So we got Vips here. So now I'm looking for China risk. I'm just looking for China risk. And at the end of the day, trading is all 100% stock selection. You can be the best trader in the world, but if you're in the wrong names and the wrong sectors, doesn't matter. You're going to have a bad time. So a big part of me choosing VIPs in my risk selection is K-Web's breaking out, and I'm looking for China risk. So I'm not out there just looking for nice chart patterns, right? It's got to make sense in a story sense. And that really did make a lot of sense to me. So this is just a simple breakout buy. But again, we got this huge base. But what I want you to focus on is look at this power up. It's a nice power up. 3 weeks of tight consolidation below the level. That's what gets me to buy the stock. So I do buy this inside day a little bit because I'm looking for the China risk. And then I add on confirmation, but my stop is 17, so I buy 17.50 and my stop's 17. So I can't I got to give these China names like a little more nominal room because how crazy they trade and stuff. So so this is just a simple breakout buy, but this is more about the K-Web and MCHI being in stage 2 and a recognition of that, and then forcing those, finding some China risk that makes sense. This is coming out of stage 2 base. So I buy 17.50 versus 17. I trim a third into this 18.90. I think it's all 18.44. No, I only trimmed 20% that time. So I'm trying to hold for the macro breakout because it's such a huge move. And then so I trimmed 20% here into this, 1869-ish, we'll say. Gives me a nice little flag. Has a full-fledged 5 EMA extension there. That's when I get out of another third of my position, so I have half left. And what's funny is at this point, the joke is we're going to be, this name moves so slow, we're going to be in the name the next 2 years. And, that's the joke. Oh, man, VIX, slow as molasses, never going to sell this one. And then I'm out 2 days later on a Trump tweet. So the important parts to recognize about that is sector stage 2. If you ever see a sector going stage 2, I'm going to find all the trades that make sense in that stage 2. Here's the IGV stuff. I'm telling you, I'm going to go on tangents all day, Richard. We're going to be here till midnight.
The tangents are where the good stuff is. It's good.
I know, for real. But here's the IGV. This is like the software sector, and we talked about kind of snow and all those names igniting, but this is what the IGV looked like before they ignited. And that's what I was looking for in that ignition is, there's a lot to be learned from sector patterns, right? What got me into the URA trade was, what got me into OKLO and LEU was this amazing, this sector flag. Right. So there's a lot of sector stuff out there to learn. And then you dive into the weeds of the actual sector. Okay. Moving right along here. All right. So we did some earnings gap ups. We did that.
Do you want to do the rollover short with CRWV? Go ahead. Sorry.
You want to do shorts or you want to do mistakes? I'm going to save mistakes for the end.
Let's do mistakes at the end. Let's do some shorts first. So I think was CRWV one of the names?
Yeah, this is probably the best execution trade I've had in my life. And I short 10. I looked up stats and I short 7% of the time over my career, which is 1 out of every 14 trades. So it's not like this is a huge part of my playbook. This is just when it's staring at me. And what happens is it usually coincides with the market getting choppy after a momentum phase. Right. So it just helps because I'm still going to have longs on. So it's really easy to hold these shorts and trade them properly because the short risk feels nice when I'm getting chopped up in longs. So guys will never take trades to the short side because I guess, it makes sense if you haven't had the training to do it. But if you understand how it can work on both sides, it makes you feel so much better about risk. Just just having it on and not needing the market to, always be going up. So here's how I see this core weave. It has this run, and I had a few trades in this run, but I didn't care to talk about it. But here's my entire trading system is compression and expansion. That's it. So I'm looking at this core weave, and you look at these days, right? It goes $67 to $84, $17 high and low. You look at this day, 125 to 150, $25 high to low, right? And then it gets in this consolidation phase. And when it's in this phase, look how small the range, the trading ranges get, right? We look at this day. This is a $9 up and down day. This is $25 up and down. This is almost a third of that, right? So we can just see this is a visual of buyers meeting sellers. And when I'm in this, when I'm looking at this trade, so I shorted the F out of this thing, but when I'm assessing the setup, I am looking long first because I'm just a better bull. I'm looking and I'm looking at this trade and I'm posting on Twitter that it's probably a long. Like, because, all this is to me is a falling wedge or a consolidation, or you could even consider this, I guess, VCP, like Minervini stuff. But this inside day is just the biggest thing to me. So it has this, let's look at this inside day. So this inside day is the whole trade. No, it wasn't this inside day. It was this inside day. Okay, so here is the actual. So now, this is very arguably a falling wedge. Look at this tight action, right? I'm ready to buy this thing up through highs, no problem. So here, if you could see on the top, it says high 146.47, low 149.70. Here's how I'm taking the trade. I'm buying the new high or I'm selling the new low. And it's that simple. It's that simple. So then what happens the next day? Okay, it breaks down. So I'm shorting 149.70, and then I'm shorting, this low is 148.75. So that's more of a confirmation add to the short. But I shorted 149.70 and 148.75, and I originally have my stop prior day's highs 156.50, but then when it extends lower, I move my stop to high a day, because if that's violated, then honestly, I'm going to be looking long, right? If it just, it's an inflection point. So all I know, I don't know what's going to happen next. All I know is this name is not staying here for a long time. Either it's going to 200 or it's going to 100 very soon. But it gives me that short trigger. So my original stop is previous high day, and now I'm short 148.75. We'll call it 148.50 against 153.50, just for $5 risk, right? So I trade this one, and I only covered like 20% into this down move. So I'm so proud of myself for this one. I cover 20% into this down move because it's like a perfect extension to the downside. I cover 20% and I covered 20%, and now I can keep my stop and keep 4/5 of my stock, and my risk is paid for. So now no emotion. Now I have no emotions. So now I can handle it against the 20 EMA, and you're going to have to believe me on this one. You can go back on the Twitter. I really I let it bounce to the 20 EMA. I let it bounce these days, and I just trailed it, and I covered on this 5 EMA extension.
Wow.
And what helps me out cover on this day is some of my guys that I love. David Prince, a guy I learned a ton from when he was at T3. He's this nasty volatility trader. He was looking to buy it here. So, I get right. I'm getting information. He's like, "Ooh, I'm starting to look long core weave, kind of 100, or if it comes sub 100, that's where I'm looking long." So I get information from traders like that. So I'm like, okay. So then I cover it all. It doesn't quite go 180, and I cover like 101, like 25. So 148.50 against 153.50, and I make $48 on $5 risk. It's almost 10 to 1, 9.5 to 1. Great trade there. That's a sick trade. And just the execution on the chart is like, oh my goodness. Oh my goodness.
That's
what I call it. I call this a 20 EMA rollover short. This is it's a nice part of my playbook, and it's like no one's doing this stuff. So like I want to talk about shorts. I didn't want to only talk about breakouts because I want to talk about the stuff that makes me me. You know.
Can I show you one thing before we go to Microsoft? Bring up
Yes,
ARM, because that CoreWeave setup looked exactly like ARM after the earnings gap failure way back. No, right after the earnings gap. So as it rolled over right there, it's like identical price action. Exactly.
Dude, this is yes.
Yep.
Yes, Richard, you gotta trade with me, brother. That is a sick rollover short setup. And what it is, and what the best part is like, look at the date. This is that April F fest that I got smoked in, right? So it looks like a long, and now if you really look at the price action now, it's like higher lows, lower highs. This is buyers meeting sellers, and then it rolls over, and that's the short, right? And then this is the perfect entry right here, right? It gave you an inside day on all the moving averages, and then you look to enter this day against these highs, and then it extends, and you put your stop here, because if it does reverse, right, it's either still in consolidation or it's buyer stepping up, and then you're positioned for this move, and then that's some good trading. So I hope you add this to your system, bro.
Start
calling out some 20 EMA rollover shorts.
Shorting is not my game, but I need to get better at it, like you said, to do both sides.
It's really, really useful, and what people don't realize is it's like this is what I do, and you know when you need to hear confirmation of things, just invert the chart. Like you look at this chart, we take this away, it's like this is just a sick base.
And you see it so easily, and
you see it so easily. So what I do is I actually trade earnings gap downs. When they gap down, bear flag out, and I'll short them too. Yep. I don't have to do that now in this market, but it's a part of my playbook, and it's such a great tool to have, because everyone on Twitter and stuff is just such a price action trader, but everyone's going to be only long, and there's just such very clear cues to do these things, to execute these trades, and they're huge risk reward trades, and if you're getting anything from me, it's just invert that chart, and it's gonna, and you can use that technical the technical information from the inverted chart. Right. Like that's what I really want. All right, let's talk gap down shorts. Oh yeah, so I'm starting to track this CHWY now. A little maybe macro cup and handle, word to the wise. But here was the trade at the time, and this is just like this is an entry I'm very proud of. So CHWY has a absolute sick run this year, May 25, and they come out with earnings. Guidance is horrible. So when I'm assessing earnings, like the future stuff is the most important stuff to me. Guidance, fiscal year 26 growth estimates, everything in the future is really what's telling me. So if their guidance is negative, their outlook is negative on a gap down, that's it for me. That's enough to get me interested in this type of short. So what I'm looking for at this gap down, I'm looking for a bear flag to short. So it's looking, and because everyone is so long focused, especially on Twitter, it's like they can't imagine that like a gap down is going to bear flag and just continue lower, but just go with the gap. When a name gaps, just go with the gap. Don't try to be a hero. All right. So many guys try to be heroes. Like Wall Street decided that the earnings were terrible. The only way you buy something that gaps down is if it gaps down and surges back, because Wall Street initially thought they were bad, but now they're not. They decided that the earnings were good. So I take the trade here, and the 5 EMA catches up. It takes out a high and a reversal, and I have a nice entry here, like 42.50. It pivots, and it comes right back at me, and I'm just getting stopped out break even. It's like, okay, I'm not right in this setup, right? And it keeps going. And what's funny is like real-time stuff. And it's like my homies on Twitter who I love, they're like, CHWY, long setup. And I'm sitting here going, CHWY, short setup, and I'm looking to aggressively like look for a sick entry that fits my system. So let's go bar by bar here, right? So I'm seeing this as, let's invert it the whole time so that we see, right? Pretend these are green, pretend these are red. All this is, right? Earnings gap up, and now it's pulling back into moving average support, right? And now it has this day, where it's like, this is an EMA-reclaim, right? It didn't lose it and would be like a slingshot, but it's more of an EMA-reclaim, which is a huge part of my system. So again, when the chart looks like this, no one's shorting, so they can't imagine, to put this trade on. But when you look at it like this, I'm simply shorting through the low of this day. Oh, no, it wasn't even, it went a step further. Sorry. It went a step further. When now look at this. It's like, oh my God, this is like such an amazing tight setup. And that's why I have my circle there, because I short the low of day is 42.87. I short 42.85, just have a sell stop. And my buy stop is, sell stop is literally just off this candle, shorting through the lows, giving it to these highs, because let's count the layers of probability, right? Gaps down on earnings, guidance is trash, so their outlook, their estimates are bad. Already, like CHWY, I don't have to look up if CHWY is a high PE name. Like, I can just guess. But so then it's it gaps down. And now it's extended from moving averages, pulls back into the moving averages, gives me that compression. Then now I'm going for expansion. So it gives me that retest. This is first cover opportunity, and I'm working every day on my covering. So this is only a 3R kick. And in the beginning, I talked to you about CEP. Tangent, bro. Tangent. I'm sorry.
You're good.
This is a 5-to-1 trade in 2 days. All right. Look how hard I had to work to make 3-to-1 in CHWY. That's hard work. 1, 2, 3, 4, 5, 6, 7 days of work, right? Trusting my process, not taking profit, not covering, that's hard work. And then I look at this mini 5 EMA extension into this prior support level. So I take off a third. I think it was only 3-to-1, 39.66. My price is 42.85 against 43.85. And I'm covering that. Yeah, so it's only 3-to-1, but it's like, look how sick of a trade that is for only 3-to-1, right? Like on the chart, those are amazing dots. But these recent IPOs, you can really cash for them for quick 5-to-1s. So it gives me this day 5 EMA extension on this CHWY. It reverses. I cover some, but again, these shorts for me now are still like, I'm trying to get data on myself, so I'm keeping a third left or whatever it is onto a 10 EMA trail. So we're going bar by bar, right? And let's say you're short this name, Richard. That looks like a great spot to cover. Could you agree?
Boom. Yeah.
Every fucking time, yo. Every time. And all I've learned is how much better the 20 EMA trail is. So now what I do is when the 20 EMA crosses over my price, I'm going to give a big portion of my trail to that. So I did hold like a 10% position to cover, that I try to treat right no matter what. That's like, I'm just trying to get better at trading. Because again, I'm in the little league still. I have my biggest battles ahead of me. And then eventually, these are sick covers, but they're only like 5%. And then this is really the trade for me, which ended up being a 4R trade. But again, the 20 EMA trail, that's where it's at. That's where it's really at. So another one I had one of these is Okta. And again, most traders are long focused. So here's what I see. I see a sick base. And these Okta earnings are coming up, and I'm searching for gap ups. When I'm doing my earnings research, I'm making a huge watch list of every single name that gaps up. Tangent time, brother. So what I used to do is I used to go on briefing.com and I type up every one of these names every single night. And if they gapped up, I put them on a watch list. And if it sets up later, that's when I'm really diving into the earnings and looking at that. So it's price action first. And then it's, the lookup. It's like Druckenmiller says, invest first, investigate later. But that's how I look at that. Now what I do, this is like the sickest cheat code, and it kills me to give this up. But market surge here. You go to earnings reported. You scroll over, and you go to relative strength rating, and you filter by that, 99, right? So you get all the sickest earnings reactions for the strongest names, APLD, but you look at the earnings, down 67, right? Like AEHR, it's like you're getting all the best top right names, and it's like, it's 2027 earnings estimates are 34,000% increase. I guess that's why this is a highly sought after name. But you just go through this, and so again, this would take me hours and hours every night. Now I can simply go to that. And then another really quick, great tool for earnings is the Finviz scanner is earnings date. We'll go yesterday after market close. We go performance today up. Wow, nothing, huh? Jeez. Oh, I guess today was a tough day in the market. All right, today before market open. Right. So let's look at the charts here. So these are, and I'm not really going to trade a ton of bank names, but it's like that's how you can see all these earnings reactions in real time. And it's like Bank of America gapping up on earnings. I'm probably not going to trade that one. You know, I'm not a big bank trader, but this PLD, look at that one. Look at that earnings reaction. So like a PLD, I'm going to boom, 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 and I create a big earnings watch list and then I have just hundreds and hundreds of names. And if you don't believe me, you know, you open my list and it's just earnings every quarter. I have all these earnings quarters, you know, and so that's like such a cheat code into a process. I started 2-3 hours every night just to do earnings research, just to see what gapped up and down. I got 3 hours saved by Finviz. Now I got, you know, an hour saved by Market Surge. And now like the theme tracker on Deep View, it's like that's another hour saved. It's crazy what we have in these times. But all right, off the tangent. My bad. So Okta, this is a base. This is a sick stage 1 base. This was on my radar to be a long. So I'm hoping these earnings are sick. And the reason it came across my chart is because I'm hoping the earnings are sick. So it gaps up so it could eventually give me a flag because I'm buying every flag in a stage 2 breakout. Instead, it gaps down on earnings. So you look at the weekly chart when it gaps down on earnings. It's just a failed breakout to me. This is a failed breakout. You look at that volume. Huge volume on the failed stage 1 breakout. So that makes sense that it's going to be a short, right? We go to the daily time frame. Whoa. Where am I at? I got lost. Oh, here we are. Where am I? I'm in 2020. All right, sorry. I'm just so zoomed out. Okay. I lost it a little bit there. All right. So this is the actual earnings gap down. And it's not like these trades aren't like I'm hungry for this risk. This is a trade that forced me to take it because of my entry tactics and my system. So we look at this trade and it gaps down on earnings. It consolidates. Again, let's look at this just completely inverted. So it's easy, right? Gaps up on earnings, pulls back. The 5 EMA catches up. I have an inside day to execute off of. And that's it. I buy through the inside day. I give it to the thing. And if you remember that CHWY execution, that first, I sold it short first on the 5 EMA catch up and got out break even a couple days later. But you look at it here and like it worked perfectly. So, you know, the entry is that low. The entry is, what are these lows? Just, this is sell stop, 104. High of day, 105.53. High of day, 105. So I'm shorting 104, $1.50 risk. So I got to make $7.50. Right. So this first kick is a nice 5-to-1 kick. This is a really, really nice one. I've told you so many bad kicks that you got to believe me on the really good ones. All right. So I'm holding this one. So I only kick 25%. This is 5-to-1. And what kills me is this 10 EMA trail because I do take a big chunk off here.
Yep.
Oh, God. But again, the 20, I'm just learning. You know, we get these lessons in real time. And then what happens? You know what happens, Richard. The real move happens after that. So 20 EMA trails, once price crosses, obviously something I got to work on. But, you know, sick entry. So that's an earnings flag gap down. All right. So we're back from a little bathroom break. I was just telling Richard how I'm going all night. This might be a 5-hour. I don't care. Okay. Okay. So let's talk about this Microsoft rollover short. So again, similar thing where I guess I keep the annotations up for the guys at home. It makes a lot of sense. So at this point in the trade, I'm just, you know, this is, it could be a long, it could be a short. It's just an inflection point, right? Then this day happens and arguably a range move, bearish engulfing day. And now I'm starting to think, okay, this is looking rollover. But again, I can't short 520 against 533. It's too much risk for me. So hopefully it sets up. Oh, it gives me an inside day. So now I'm like, okay, if this goes inside day and down, I'm going to short the hell out of this thing. But what's it do? It takes the inside day. I got to get this 200 SMA out of here. You can't see anything. It takes this inside day up into now this is absolutely a short. and I was away from the desk. I was at a baby appointment. I was so mad at myself for not getting short this day. This baby's costing me a fortune in missed seat time. But so then it gives me a great trigger, and I just short this day, 519 against 523. This isn't a huge trade. I cover some into weakness here. It has this 50 EMA, but I know this is the 10 week, and this is a spot I'm looking to buy, so I cover all here. And it's not a big trade. What I want people to understand is it's more of a cash flow trade. But if I'm so long focused that if I can have this short on, it just makes me feel at ease about my longs getting smoked because I have this, kind of saving my P&L. So we got the rollover short there, and that was just another little, like it's just like a little trade, a little cash flow trade, nothing special about that. But that's the trade at hand. All right, I think it's time to go through.
Can I ask you one question? So
please
scroll back in price action a little bit, right before the short. So that inside day, why is your bias short versus recovery long? It made that big move down, and then inside day, I would view that, all right, there's no follow through. Yes, there's like expansion tomorrow, likely. Why is your bias short on that day versus long?
Okay, I wasn't. All right. All right. So in real time, I wasn't like
Gotcha.
that. I wasn't saying this is definitely a short at this point in real time. I didn't have enough information to say that. I'm still looking. We were still looking maybe long.
The next day is a tell. It's like it tried to go.
That's the tell, because it went inside day and up for like, look at this high, 525.95. Yep. And again, technical analysis, it's not a secret. A lot of traders are buying inside days. So a lot of traders are buying 526. The high of day is 526.10. It's just sucking in those inside day buyers. And then it's really telling us the information. This is the day. This is the key day on the trade, this day. And then I get short that day. All right. It's time to talk about Reddit. It's time to talk about Reddit. Oh, God, how much I don't want to talk about Reddit. This has been my biggest mistake all year. This name just has my number. Like, the name just has my number because I'm so in my head about it. So, all right. Let's talk about this Twitter chart, and let's talk about some really important aspects of a base while I got you. Okay? So Twitter, and again, this isn't on anyone's radar because it's just had such a fall from grace. But here's the most important part of this Twitter trade, Reddit trade. You see this resistance right here, and then where does the huge buying come from? This day, and then this day. These are the huge information days. So at this point, I take a little loss here because I'm trying to sneak in. I'm trying to find a perfect entry. So it has this day, and I'm like, okay, this is maybe the tell. This is maybe a range move. So I'm looking for that first pullback. In hindsight, it shouldn't retrace the entire move. That's my mistake in the trade. That's what I needed to learn at the time. But instead, it has a gap down, so I'm risking only a quarter, like 0.25 R. But it has a gap down, and I lose like a full R position on something that was a quarter. And I enter this Friday thinking it's a Friday swing, and I get some bad news over the weekend. So again, Friday swings are great when the market's pumping. It's got to be the market's got to be in a better phase to do it. So I talk with traders all day and night. Like I've got 400 guys in my group, and the reason my group is different is because, and I'm not trying to market the group and get people to join. Like I'm good with mine. I have too much business. What makes mine different is like I've had these 400 guys, but 250 of them have been with me for 5 years. So I know these guys, and I know their families, I know their strengths, I know how they trade. Like, I'm invested in their future. So I'm talking to my boy Frankie Butters about this one, and we start talking about Reddit down here. He's a guy I traded with at the prop firm back in the day, and he was an awful trader, like on the day to day. But what he found is his strength is he's going to take 4 or 5 trades a year. He's going to take them huge. He's going to dive into the names. And he'll kill them, and he'll just hold this name for the whole move. So Frankie buys 4,400 shares here, and he's sitting here and here. This is the best trade I've ever seen in life. And this boy got a little lucky. I'm gonna have to say that he buys 4,400 here. He's in it for here. He gets out on the news this day for $500,000. I'll never have that trade because I know myself. Like, that's the important part about knowing yourself. I'll never have that trade, but I also never aspire to have that trade because it's never going to happen like that. So he starts, and when he starts calling me about a trade, it's like, I know I'm going to take this trade too, because he's just incessant. He's calling me every day. He's calling me at midnight on Saturday, and I'm picking up. We're talking. He's just like, and at this point, we're looking into the Reddit kind of story a little bit, and they're the third or fourth most trafficked site in the world at this point, and it's the only name of the 10 that is way under a 10 billion market cap. It was, I think, 3-4 billion at the time. So that was like his thing for the trade. But I'm a technical trader, so I'm like, I gotta wait for it to come to me. So I'm watching this thing every day. Come to me. Come on. All right, we got a little flag on our hands. We got a little flag now. Now this is, lining up with a perfect entry for me, right? So the next day I buy 1,200 shares. I give it a little 10K risk. I'm like, okay, that's like, it's like a nice trade for me. So I have a good position, but I want you to remember that Frankie's got 4,400 shares and he's calling me every day. He's like, you got to get to my size, brother. You got to get to my size. So I'm like, I'm looking for an ad when I just don't need to, because I'm trading P&L. I'm making all these emotional mistakes that are out of character for myself. And again, that's why I do perfect entries only. It's because I'm dying to trade. I'm dying to put on risk, and I got to keep myself safe. So this thing explodes. I'm front running the 130 base, and I have such good stock at this point. Why am I looking for an ad? Like what? Like I'm beside myself looking at this stock. So it explodes through the 130 base. I get the base breakout. I'm sitting pretty with stock, but again, I'm looking for an ad every single day for some reason. And now the 5 EMA catches up. And here is the biggest mistake I make all year. I've got my 1,200 shares, but I got to get to 4,400, right? I got to match my buddy, and we got to ride this out. He's like, I'm going to make $1 million on this trade. I want you to too. So I'm like, all right, I'll find my entry. So let's look at the price action of this day. So I go from 1,200 to 4,400 this day on the 5 EMA, and it's just so stupid. It is just so. Oh God, I'm so mad. And now this name is like got my number. And let's look at the price action from that day.
There we are, yeah.
Like this is it. I know this is it. Like, here's the thing. So it gives me all this, and now we know the 5 EMA is like right here on the daily, right? So I load up and I go from 1,200 to 4,400 shares here, and it goes like this. And I'm just giving it to the 5 EMA low a day, and I get out of 3,200 shares. I take like a 20K loss or whatever it is on this day. And I keep my core position, but if you look, the base low is 130, and then this low is 132. Like I didn't even give it the right amount of room. Like oh God. So I just make this so I take a huge loss that day.
It's further, yeah.
Yeah. So I have the perfect entry, right? And then what's it do the next day, of course? And I take a 20K loss this day on this like so stupid. So I have it. Like what's wrong with me, right? And then what's it do? That's when the rip happens. And I trade the rest of the stock well. I covered into strength. This is a 5 EMA extension here, covered some. But, and then I ended up making like 4R, let's say, on this move. But I lost 2R on that trade. So on a trade, I should be let's see. On a trade, I should be, I'm like barely positive on the name. And like, it should be one of my best names. So looking to add too heavy late was just such a dumb thing. And then it frustrated me in this base. And now a name's got my number, and this thing's got my number. Frankie's still in this thing. Now it rips on earnings. And now this guy is going to become a millionaire from the stock. And like, I want all my brothers to do well. And I'm going to this name has made me gone psychotic at this point. Right. But I'm still taking his phone calls every day. And I'm like, yo, this thing's going to 300. You're making your million. And like, listen, I'm letting it come to me again. I'm going to buy this thing back. Cause now it became an AI stock after earnings, right? After everyone learned that at the time they were using the language learning models. They were scraping Reddit, and now it's an AI stock. And that's why it did this when earnings pop. So then, again, I'm looking, I'm like, let it come to me. I see this move. I'm like, let it come to me. It has this stress test, holds up at the 20 EMA. So I know the 20 EMA is my out. So I have this inside day, and then I buy like 100 shares this day. And I'm just like, this is all against the 20 EMA. Then it has this little inside day, and I'm loading up. and I'm beginning to load up, but I'm just giving it to these lows. I'm only giving it to 212.50. I'm not fully giving it to the 20 EMA. Mistake. Now look at this day. Oh boy, what am I, from what you've learned about me, what am I feeling at this time, right? And now, what is this name doing on Twitter? So everyone's going nuts about it, blah, blah, blah. There's a 220.50 seller sitting here. So I've got about 1,000 shares at this point. I'm trying to build into a position. But again, I should have bought this day more. So this day, like this is the pressure cooker situation. So I start buying after hours. I go from 1K to like 5 or 6K. So you see this high of day is 220.50. So this thing is gapping up a little bit after hours. And there's a 220.50 seller, and it's me on the tape. I'm literally buying 100 shares at a clip, like just trying to get information. I'm trying to see what's up with this seller, how much, but it's after hours. It's after hours. I gotta chill. Like what? Like that's why I gotta have these like controls about like gunslinger mentality. I'm dying to trade too much, but I'm literally trying to break this seller myself after hours. Like that's the mentality. I'm literally buying 100 shares at a clip, and I size up from 1K to 5K, and then what happens is it gets so that I don't need to buy during the day. Right? So what happens is it gives me that boom, boom, and I get smoked on it. But again, I'm focused on the sexy buy, right? So I need to be more focused on the best buy. But this name's got my number and it's in my head, and I just know that. So again, it stops short of the 20 EMA, and because I learned from the stress test, the 20 EMA is the important part. I buy it right here. I buy the name right, and I buy. Again, look where it bounced off of, Richard. We're talking entry tactics. Bounces off the 20 EMA and breaks higher. I buy like 218 against 212.40, whatever these lows are. So I buy that, and I got it. I got it again. Now I got the right entry, and now it's looking good, and I don't really need to add. And oh boy, inside. Oh boy. So now it's looking sexy again, and now, right? I got to not make the set. And now what are they doing on Twitter, Richard? What are they doing on? It's the hottest name on Twitter. And again, this is, and now this name has my number, and I've got a decent stock in it. All right. We're going bar by bar here, right? This wasn't it yet. It has this little stress test, and it's like, okay, I should have loaded my position this day. But again, now everyone in the world sees the chart at this juncture, right? And it's like, this is like the sexiest trade on Twitter. Like this is everyone's going nuts about it. Oh man. So it gaps up the next day, makes a little run. I add like 4 or 5X, and I just get out of it this day. And I take a 40K loss on this. And I'm like, yo, I just need to stop trading. Again, stupid. And I know it's stupid. I know myself. I know it's stupid. And again, but I hold my core position that I'm treating right. But the ads I treat as a new trade, and I get stopped out. Oh God. And then inside that, and then I'm just so torn up about this name. I don't really trade it again, and it makes the move. And again, I can trade the core position right. I sold some into strength when it makes that 5 EM extension, a hammer candle, and I get out of 20 EMA. But again, I took losses, right? I take the sexy losses. Like these have to be my entry points. This, and this. Buy off support on the 20 EMA. Don't buy the sexy buy that they're trying to buy on Twitter. So that was my biggest mistake of the year. I hate this name. And honestly, I had a sick day trade short in this name. This day, like just an absolute revenge short. And I did cover it all 195. Whatever. It's a day trade. We don't need to talk about it. But again, look, right? Gap down, 5 EMA catch up inside day. I short through there, but it did have a sick reversal, so I covered it. But that short felt so good. I made like 5K on it, right? Nothing that moves my account, but I'm just like, I finally got you. Like I finally got you a little bit. How's this thing looking? Oh my God, inside day. Oh, I might have to short this thing tomorrow because, market don't look so great. Market's looking very choppy. This thing can't bounce. This is a sick short setup now. All right. So that was a really, really big mistake for me. Let's keep it rolling. Bros, this is another big mistake for me. Okay. So let's talk about, I got the little annotations up. So let's talk about the setup. So bros, weekly cup and handle. So I'm trying to find a spot off support to buy and ride for the run, right? Sick weekly cup and handle. And if you look into the management team at all, they're trying to 4x their stores in the next like 4 or 5 years. Really, really aggressive growth strategy. So it is a growth stock. And this is just an IPO base. And this is just a handle, even though it's so wide. So I'm stalking this name for an entry. I'm stalking. So this is a Monday morning. And this is, this name makes no sense to me. All right, this is August 24, end of August, right? Let's look at what the Qs are doing end of August, right? Like a tough time in the market, just a volatile time, right? And this bros, I have a pilot buy because this triggers off the open. This is the strongest name in the market. It's just every day, it's just showing relative strength. It's an absolute beach ball. So it triggers off the open. I don't want to buy too much off the open. I buy 66 versus 63. Just a little pilot position, and I'm like waiting for that ad, right? Let it come to me. Oh boy. Now let's look at the setup, right? This is an awesome setup, right? We got our weekly cup and handle. We're going top down. We got the weekly, right? Now we know this little downtrend line has been the resistance the entire time. And now look at that. Support turns resistance. This is buyers stepping up. This is now an A+ setup. Again, this is the hottest name on Twitter, which, it's crazy how something gets the hottest name on Twitter and it gets sold. It's mind-boggling to me. But again, I have a little 3K position, and I see how everyone is going crazy on Twitter, and I start with my little after hours bullshit BS. And I start buying, and I go from 3K to 12K after hours. And what the market does is, I know which day it was. I sure know which day it was. Market gaps up, right? These gap ups are just so brutal lately because they're all filling the gap, and it looks like, the world's ending, but it's just a continuation of trend. So we gapped up the next day in the market, and I'm so obsessed with this setup. I make another cardinal sin that I hate making is I add another 3K, and I get up to 15K here, right? And it just breaks off the open. I buy another 3K here, and it just, whoo boy. And it just absolutely smokes me. So my mistakes in this trade, I don't think this is a bad setup. I think the setup is amazing. I think my mistakes in the trade are deciding that the trade breaks out and triggers before it happens. Now, a huge part of my strategy is built on that, right? It's built on first confirmation. But again, this is a breakout setup. This is not a support buy. I'm using a resistance to support flip as maybe this is first confirmation. I'm always trying to buy off that first confirmation. But again, I just decided in my head this was going to work out. But again, I've never seen a name go relatively strong to relatively weak this quickly. When the market, when it's doing this is what I'll never understand this about this stock. When it's at this point, right? This is when the market's just chopping, looking horrible, right? And this one looks just amazing. And then it has this little inside day, and then it has the pivot, like kind of stress test inside day, not inside, but whatever, pivot. And that gets me going. So that was a big mistake of mine. And it was deciding I had confirmation first. So you can see in the mistakes I make why I need to have all these controls about myself, because I know myself. I'm just a gunslinger. I'm dying to trade. Now, here is my biggest mistake of the year times 3 is this BE. So this BE theme. We're seeing these theme runners. And again, earnings gappers. They're my bread and butter. So this BE. All right, we got the earnings day gap up. But again, it's the reason I'm not super confident on the setup yet. These moving averages are still very extended. They're still very wide and loose. This name made a big run. It's not very tight. I like compression and expansion. So this feels like a little bit of a chase to me, right? When I'm buying this. So I buy 37.80 against 35. I just buy the inside day, right? Right? It's all going good. And this looks like nothing, right? And I completely get out of the trade. I'm playing defense. I get out break even. Okay? I get out break even at $38. Playing defense, right? When nothing's been invalidated in the trade, right? It just came back to my price. It was an emotional decision. And then all it does is it holds the 10 EMA, lets it catch up, and then goes on one of the sickest godly runs we're ever going to see. Oh, God, look at that thing. So I got out playing defense there, just changing my game plan. So you never want to change your game plan. You want to keep your original stop. That's why I like to get trades a little risk off in that first pop, because I am going to be able to manage it properly. Because you see this down day and it's like, oh, how could you sell that? But it's down 5.5%, and it's every name I'm trading is like that. Every name I'm trading is coming against me at the time. So, you can say that, maybe I'm trading too much and, that's leading to me making emotional mistakes. I absolutely agree with you in that. And, it's the ebbs and flows that I got to kind of figure out in that regard. So, this BE, change of game plan. And then on Fed day, I actually did buy this back, but I sold it. So I had a funny tweet where it's like, buys 38, sells 38. And I bought back, I bought this 87 back. I had a pretty sick entry Friday. And then it has the news, of course. But then it has the news Friday. So I buy 87. You can see it well on I hate executing off a 5-minute chart, but this is just a sick entry. So again, so I buy this one back, right? I make a mistake at $37 and I buy it back at $87, like the good trader I am. And I get out of this one day one, but I did get a little kickoff at highs. But then it had the news that, of course, rockets it higher. But again, if it's a new trade and I experience that type of selling day one, I'm getting out no matter what. So I don't have like mental capital loss, like no mental capital is lost for me doing that, right? This is a lot of mental capital loss. I can't explain to you the amount of mental capital loss this name Reddit has given me. Like I can't explain it to you. I'm shorting. I've decided I'm shorting this tomorrow. We can see what happens in a week. And then here's an example of a good loser from my system. TMDX. Love these earnings. Love the company's outlook. They got a great management team. They're focused on growth. It's got this cup. It's got a weekly handle, right? So I'm looking for a daily little entry. I'm looking for some, positive moving average action. I'm seeing these higher lows here. I'm looking at this as a support buy, and I buy this day 118 versus 114. I buy a little half position, kind of prepare for the breakout. I'm prepared to add, go up to 2R risks to quadruple my size through this 120.50, because if it breaks out of this weekly cup and handle breakout, right, I've got the perfect price for that. But, I'm just wrong in the trade. And I sell it, and that's zero mental capital lost on that, versus something like Reddit, which had my number all year. And I might set the alarm 30 minutes earlier to check on that Reddit tomorrow. So that's that. All right, so I think that's all the charts.
Did you? Sorry to add one more, but did you want to go over?
No, I'm ready.
Did you want to go over GILD? GILD?
Oh yeah. Well, the main thing about GILD was I wanted to talk about the buying the range move, this is something like I just completely invented that I'm really proud of. A lot of my stuff is just like trial and error. So that's why I'm very proud of it, because it's taken me like seeing a range move and then buying the first pullback. This is something that I'm very proud of as an entry tactic. So I see we're looking at GILD, and like at this point it's on a watch list, but it's not on a radar. Boom, range move, right? We see the consolidation. We see the little falling descendal. It's sloppy, but we see it, right? So now I'm saying, okay, I can't buy 105 versus 197, right? $8 risk. I got to make $40 to the upside to make 5 times my risk. That would be years, and I'm not going to be able to do that. But if I can get a nice little, right? So now is when I begin to track the name very closely. Okay, now it's back in range. Now it's like, okay, let's see what happens here. This is my entry. It shakes out this low, right? Here's the opening price. Again, this is another one where it was just a simple buy stop through highs. It shakes the opening, takes out these lows. So now at this point, I just put a buy stop in highs. If it gets me in, it gets me in. If it doesn't and needs more time, that's fine, right? So it opened 162, flushes to 97.86. I just put a buy stop 163. So that's my price against 97.86. So we'll call it $2 risk, right? Got to make 10 to the upside. Gives me these three days higher, kicks them into strength for about $10, 5 to 1. Now I'm trying to sit with my position, shakes me out of the 10 EMA, but I hold on to some stock, and now it just gets me out at 20 EMA. So it's like, And then I'm stopped out, final trade, stopped out final third. I make 4R on the trade. But the thing, it's like this name didn't go anywhere. Nothing happened with this stock, right? It's like, but I was able to pull a 4R trade out of it because I'm so focused on range move. You buy the first pullback. Okay. Range move, 10% day in the Qs, right? You hop on Twitter. Everyone wants to buy this day. No. You buy the first pullback. Right? So once this happens in the Qs this year, range move, I wasn't aggressively looking to buy this day. I needed it, but because I understand that range move, buying the first pullback, I'm not aggressively looking to buy this. For the record, I'm not trying to lie to you. But I have it in my mind. I'm like looking for buyers to show up here, and I'm telling everyone I'm trading with, I'm like, look for that range move. Like, this is where kind of buyers may show up if it wants to just not negate this whole move. So range move, buy the first pullback to position for the breakout. And, let's hypothetically say you did it here. You buy that one, and then, in a hypothetical world, not too bad trade.
Perfect. Yeah. I say it the same way, just power off lows, first higher low. It's like, it's the same concept.
Okay. So I didn't invent that. So
well,
I shouldn't be so hot on myself about that. It's just everyone knows that, and I call it something
we
different.
can both take credit for it, I think. So it's all good.
All right. So that's what I got for you on the chart stuff. You want me to stop sharing now?
Yeah, for sure. That was awesome, man. I'm going to enjoy watching that back.
I see the runtime, 3:13.
Yeah,
That's nice.
This is good.
Nice. I could go another 5 if you need me to.
Well, we'll save that for round 2, but this has been awesome, Shake. If you had any advice for newer traders watching this, what would you say to them? What are the most important concepts that you want people to take away from, this podcast today that, if they learn one or two things, that's what you want them to walk away with?
There's 2 things, and it's very simply, it's risk reward. Trading is just such a simple game of math when you really boil it down and simplify everything. How much are you risking? How much are you rewarded when you're right? What is your batting average? And it's just always keep the math game on your side. And 2 is you underestimate what you can accomplish in a year. You overestimate what you can accomplish in a year. You underestimate what you can accomplish in 10 years. When I'm struggling, when I'm in those first few years and I'm telling you those stories about a stepper and all these things, it's like, I could never see myself trading $1 million. I could never see myself being a millionaire. I could never see any of this stuff. Like, it's just, I'm just so lost in the moment and can't figure it out. But, you can really work your way into becoming a great trader. I'm not a brainiac. Like, I know who I am. And that's my biggest strength is that I know who I am and I know my strengths and I know my weaknesses. And I know that I'm not a brainiac. Like, I never have engineer brain and need to, and kind of suffer from that where a lot of engineers I work with, they're not the best traders because they need A plus B to equal C. And sometimes the market's just, random and emotional, right? So I never suffer from that, for example, but you can absolutely work your way into being a great trader. You can start at any age. Captain Joe, my boy, at One Chartmaster, right? He's huge on Twitter. Oh my God, the story's so funny. This guy starts trading with me in like 2018, 2019, and he's a beast, but he doesn't start trading until he's in his like 50s. I don't know how old he is. I'm guessing. So if he's like younger than that, my bad. But here's a guy who just worked himself into becoming a great trader. So we're trading together 2018, 2019. And he's becoming a beast. He's like my favorite. We're like, this little pack, and we're trading together so well. He has a falling out with my old business partner. I lose him, and I'm heartbroken. And then I find him on Twitter, and we reconnect this year, and he's giving me all these shout outs on Twitter. That's awesome. And it's just crazy to see how he has changed. So like, I started at a trading firm, right? So I have that pedigree of, it's easier for me to make it as a trader. He didn't. He started with me like 6-7 years ago, and then he just worked his way into becoming a great trader. He learned a lot of my system in the beginning, and it's going to speed up his learning curve. But he's just such like a hardworking animal that's why he is successful. And you can completely just work your way into being a great trader. If I told you what he's up this year, the snipers would be ready at his house. So he's like a guy. I'm so proud of that guy. He's a great friend, and It's really, I really appreciate how much love he's shown me, because I don't think I'm getting this interview personally if I just come on Twitter and I have 1,000 followers and, like, you know, that's all these things had to happen for me to get this interview, right? Because I came in second, so I was like, all right, I need a plan B. I just gotta show my value on Twitter, and I gotta, you know, show that I'm actually really good at doing this stuff, and, you know, hope to get it that way. So, you know, people like him shouting me out, and just seeing the work ethic that he's shown is just like, that tells me anyone can make it as a trader if you work hard enough. That's it.
Yeah, you gotta let the dogs in. Awesome, Shake. No, this has been a ton of fun. Where can people go if they want to learn more about your process, your system? What resources would you point them towards?
Pinpoint trading, baby. So I wrote this book in 12 days because I hadn't put any pen to paper in about my strategy in 5 years. I used to have this old business, and as I'm gravitating towards a fund, my old business partner is doing taxes, and it's just like a logistical nightmare. So we had to split up. So I wrote this book in 12 days about my strategy. I didn't expect people to. I only made it for my guys. Like, that's why I wrote it in 12 days. I just, like, needed new material and whatever. I wasn't, like, trying to sell it or whatever, but it's my complete strategy here. Pinpoint trading. That's my business. Pinpointtrading.com. Find me on Twitter at Pryzby1. Check out that whiteboard behind me. You see me? I'm doing a little marketing here. But I wrote the book in 12 days. I tried to make it as dense and simple as possible. It's 250 pages. It could have been 1,000. But I tried to make it everything I do in a very simple and dense sense, so you can read it in 1, 2, and 3 days and really learn a ton about how I do things. So that's what I got for you. Thank you so much, brother. This is crazy.
Yeah, thanks for your time. Yeah, we'll have the link to your Twitter and Pinpoint Trading down below in the description for people to check out. Shake, thank you so much for spending the time. I appreciate all the work that went into, you know, planning this and running through all your trades. It's awesome. And
no, it was the 13 years. It was the 13 years of blood, sweat, and tears. And there's a lot of tears. Yeah. There's a lot of tears on that journey.
Just don't lose too much money on Reddit in the future. That's my only.
Yo,
we'll see.
Tomorrow, if you see it down 5%, be like, yo, did you? And I'll be like, I did.
The people watching this video will know what happened. So,
yes.
To everybody watching, hope you guys dug this as much as I did. Definitely give it a rewatch. Make sure to take notes as you do. If you enjoyed it, go ahead and leave a like down below. Subscribe if you're new to the channel, and check out the resources mentioned by Shake. And we'll see you guys in the next one. Cheers.